think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
This is Daybreak Europe. I'm Kriti Gupta. Let's get to the stories that set your agenda.
Taking you from the U.S. market's close.
A lot of this was priced into the U.S. session.
To the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. The top names in global leadership are on Bloomberg.
The conflict between the U.S. and China has escalated so much. This is one of my greatest fears, that the small nation is forced to choose side.
Bloomberg. Context changes everything. Season is here.
Tons going on, lots of earnings.
Beat wherever you look.
Bloomberg breaks the numbers first.
It's a tale of two earnings. Results from Goldman Sachs, Bank of America, and Morgan Stanley.
Netflix is out, guys.
With exclusive expert analysis.
Recovery is underway. They crushed it. It was one of their best quarters ever.
This is a story all about pricing power. We're going to make more money. We're going to make more money. And we're going to make more money.
We're making bank. And I think that is what we can take away.
Bloomberg Television and Radio. Context changes everything.
Welcome back. This is Markets Today. We are 10 minutes into our European trading day, and things looking modestly positive across European equity markets, apart from the FTSE 100, where we are flat. Elsewhere, we are seeing small gains coming through. Let's check on the individual stocks that are on the move. A lot of really interesting earnings stories and some other broader themes. Joe Easton has our movers this morning. Joe.
So Barclays accounting for some of that underperformance in the FTSE 100, absolutely slammed at the open of trading here in London, down around 7%, which is a big move for that banking stock in the UK. And we can see it feeding through as well into Lloyds and also NatWest. Now, Lloyds is reporting earnings tomorrow, followed by NatWest on Thursday, and Barclays today warning that they're reducing their net interest margin guidance for their domestic market, and that seems to be feeding through into both Lloyds and NatWest ahead of those reports. Barclays also reporting weakness in their fixed income trading business as well. Going the other way in banking is UniCredit, UCG, up around 1%. Their net interest income does look really strong in their latest report, and they've also said they may be able to avoid paying some of that extra banking tax in Italy if they set aside more capital. So it's a double boost for them this morning. Then in terms of Hermes, that one gaining, so up 2% at the moment over in Paris. Those leather handbags selling really well, beating estimates, 20% sales growth in the US, and that's countering some of the decline they're seeing in Asia, where they're not getting the tourism boost from China. And we've got Kering, the owner of Gucci, reporting earnings after the close of trading today, and we're seeing a bit of a boost coming up, a bit of relief, given the LVMH report was so weak just a couple of weeks ago now. In terms of healthcare, Novartis slipping, that one potentially a bit surprising. They raised their guidance for the third time this year due to strength in multiple sclerosis and also some cancer drugs as well, but perhaps priced in, given that has outperformed already this year. And I've brought up AstraZeneca because that stock had fallen 10% in 4 days before today. A few bits of news going on. They had some disappointing cancer drugs, but they're currently in Madrid presenting some new data alongside Johnson & Johnson, and analysts saying that might provide some relief for Astra today, and we're seeing that coming up around 1%. Finally, we've got Logitech. This is in the tech space. They make headsets and also keyboards for computers. Strong sales out of them. But in recruiters, we had Randstad. Now, they've actually reported some weakness in some of their fee income in terms of temporary staffing, but doesn't seem to be having too much of an effect, coming up around 1%. On the ratings changes, Rio Tinto is a new buy over at Barclays. The first time Barclays has rated that stock buy for 5 years. This is as they've increased their copper production. According to Barclays, they say you should buy that one. And with Bitcoin up around 11% early this morning, I bought up CoinShares International over in Sweden. Probably the only way to play the Bitcoin trade in the European stock market. Up around 0.7%, getting a bit of a boost from that effect. But lots of movers, as you say, this morning.
Okay, Joe Easton from our equities team, whose Birkin man bag is a source of great envy in the newsroom. Joe, thank you very much indeed. Let's stay on the equity story, the earnings story, I should say, and bring in Chris Wiley, then Chief Investment Officer at Connor Broadley. Chris, good morning. Thanks for joining us. Are earnings expectations still too high?
No, I don't think so. I mean, obviously, in certain sectors, banks, for instance, there have been a number of key variables, and the one we're seeing this morning crystallises net interest margins. There are such lags in the banking sector. They tend to do very well when interest rates go up very quickly because they can pass it on quickly before they have to compensate depositors. Now we're starting to see the payback on that and that sort of squeeze. So that's a sector where we've got considerable lags. I think most of the evidence recently has been that earnings expectations in the near term are fairly realistic. I think the real question will come next year. I mean, after all, we're nearly at the end of this year, so you wouldn't expect big variance versus the forecast. Next year is a big question, I have to say. At the top-down level, we're still looking for 12% earnings growth in the US, which looks pretty good, and expanding margins, which looks a pretty tall ask, actually.
Let me just break into our conversation, Chris. Good morning to you. Just to bring the French PMI data to viewers and get your thoughts on where we are on the Eurozone story, because the French October services PMI coming in better than expected at 46.1, so still in contraction territory, but better than the 45 estimate. Manufacturing PMI coming in below the estimate. The number is coming at 42.6. So a further leg down in French manufacturing. Just as many people were starting to ask in recent quarters whether we were seeing a bottoming out of the manufacturing story in Europe. Well, of course, we have to wait for the rest of the Eurozone, perhaps. But in terms of the French story, then, the sign's not particularly good.
No, and I mean, when you look at these surveys across Europe, I mean, Germany, plumbing, we've not seen manufacturing survey data this week in sort of...
And we'll get that update in 15 minutes, yeah.
So, and the question has been, how low can it go, quite frankly? And so, of course, people are going to call the bottom because we're at the bottom of long-term ranges. But, it's very hard to see what's really going to pull us out. And I think you'd end up coming back to China and the disappointment in the emergence from lockdown there. Obviously, still a big consumer of the capital goods that Europe manufactures and exports. So, yeah, that's the same story. And it's about the service sector on both sides of the Atlantic, keeping the whole thing afloat at the moment. And then, of course, are we in borrowed time as to how much further the consumer can do and keeping delivering and spending savings and all those things.
Do we take from that, then, and your notes to us, that you still see that US exceptionalism pushing through into 2024, because you're saying to us you see a soft landing in the US as increasingly plausible? What does that look like, and what underpins that view?
Yeah, so when we first adopted that language of saying it was increasingly plausible, I think it was about 6 months ago, in April, May time.
But you're holding to it?
Yeah, well, that's what we're seeing from our leading indicators at the moment. And what's happened over the 6 months in terms of investor expectations is that I think a soft landing was seen as people were cynical about it. Now it's consensus. And we're not going to, consensus is quite often right, and our leading indicators say that it's still right. But there is, I think the alternative scenario is, from what we're saying, is no longer one of a hard landing, but no landing. And then the question becomes, is no landing actually good news? Is good news, or is it bad news? The bond markets are tending to suggest that it might be bad news, or at least bad news around the corner after the good news.
I suppose it depends to what extent the landing metaphor is linked with inflation, because if you get no landing and inflation stays elevated, then that will set the direction for Fed policy, one assumes.
Exactly, and I think that is what bond investors are trying to pass right now. That's why we've knocked on the door of 5% yields. And, let's just contextualize that. It was only 6 weeks ago that we really settled above 4. So these are colossal moves, and as always with bond markets, as always with any market, it's not just level, it's also the rate of change and the speed of that rate of change. So I think that's what's being factored in. Stock markets, therefore, generally have started to ruminate, shall we say, to use an euphemism, about what that really means for next year. And when we look at the balance of risks, we think that it is tipping away from stocks and towards the risks, are tipping towards stocks again and against bonds. In other words, the reward is somewhat more in favour of bonds, and your chances of getting a positive return for bonds and outperforming in bonds rather than stocks, they are increasing.
You've built up a cash position, you tell us. You're sitting in cash to some extent. What do you need to see then to put that cash to work?
Well, we have been putting it to work into bonds. I'm not convinced that you can call the top on conventional bond yields at 5% in the US. It may be so. It'd be very surprising if people weren't calling it there. Put it this way, if we went straight through 5, we'd be in big trouble.
We don't get to 6.
So, well, we'll see if we get through 5 first. If we got to 6, then I think that would be highly problematic. We've been buying bonds, as I said, maybe, not sure about conventionals yet, but TIPS, inflationary protected securities at the short end, which were yielding 3.2% real over 2 years, 3% guaranteed pretty much. Well, yes, guaranteed above inflation over 2 years. That looked almost too good to be true for us. Those yields have started to come down sharply. And even the longer maturity tips still look very attractive at 2.5%.
Okay.
So that's where we're going.
Chris, thanks so much. Thanks for joining us. Chris Wiley, Chief Investment Officer at Connor Broadley. Let me tell you that we are monitoring with interest a conversation that is taking place at the Future Investments Initiative in Riyadh. Carlyle co-founder and co-chairman David Rubenstein is hosting that panel on navigating the new normal with the CEOs of JP Morgan. You just saw him there. The CEO of Citi, of Goldman Sachs, HSBC, Bridgewater, Blackstone and BlackRock, all of those giants of the financial world on that panel. The governor of Saudi's sovereign wealth fund also present, and the chairman of Aramco. So that important Saudi dimension. We're just seeing some lines coming through from this panel. You're looking there at the host of the panel there, and you saw the JP Morgan CEO a moment ago, but also Ray Dalio of Bridgewater has been speaking and has been saying he's pessimistic about the outlook for the global economy. We'll continue to watch that and monitor it for headlines. You can watch that conversation if you would like to on Live Go. That is available to you on the Bloomberg terminal. We'll bring you all of the latest from the panel as it breaks. This is Bloomberg.
Ackerman has quietly emerged as one of the key architects of modern sports. As the founding president of the WNBA and now the commissioner of the Big East Conference, Ackerman has a knack for being at the most important tables at the most critical times.
I want to thank Val Ackerman here as well.
Val Ackerman.
I had a big part in this, in how USA Basketball and the NBA could come together to support the women's national team. I feel like we really have proven something. And for me, in my personal role, whether it's in basketball, whether it's helping women, whether it's trying to help college sports hold on to the things that have made it such an important institution, I really do believe deeply in the things that I do and how we can make a difference. And very glad that the Big East has a role to play in the circles that we're part of. I just hope that the momentum we've begun to see continues and builds in the years to come.
This is Markets Today, 23, almost 24 minutes into the European trading day. You're seeing modest gains across the European benchmark of 0.1%. Is a brighter picture over in France, up 0.3% on the CAC 40. Across your sectors, basic resources up 2.3%, autos down 0.5%, the biggest loser across your sectors. Worth flagging what's happening in the banking space as well, currently down 0.5%, close to 0.5% on the banking sector. Barclays is part of the story there. That stock plummeting after the UK lender missed estimates at its investment bank and lowered guidance for its domestic business for the second consecutive quarter. It also signalled plans to reduce structural costs in future. Tom Metcalfe, Bloomberg's finance managing editor for EMEA, joins us now for the details. Tom, your reaction to the results out of Barclays, what kind of stands out to you?
Yeah, I mean, I think the guidance around net interest margin, that is going to disappoint. Second consecutive quarter, they dropped it down to 3.05 to 3.1%. That basically just shows how competitive the retail space is in the UK. You had the banks saying, look, it's just a tough environment out there. We're having to sort of pay up to keep customers. So that's one big thing. That seems to me probably the largest thing that's going to be driving these shares down. We also saw other UK lenders fall, as you'd expect, Lloyds, NatWest down on that.
Yeah, there seems to be a few other negative dynamics going on here as well. Revenue missing in the investment bank seems to be part of the conversation. Bloomberg intelligence analysts saying that what they delivered falls short of what was delivered by US peers in that area. Also being asked a lot about cost cutting and headcount and what they can do there.
Yeah, absolutely. So on the investment bank, I think Venkat on the call described it as pockets of underperformance.
The CEO,
yeah, exactly. They missed fixed income, by a few percent. So that is disappointing, as you say. The US banks largely did better. And then, there's a very intriguing line in the results about the fact, we know they're doing a big strategic review, and they were talking about structural costs sort of trying to be pulled out of the business perhaps in the fourth quarter. So no clear clarity on what that is, but that's interesting.
It sounds like that strategic review is going to keep you and the team busy in the months ahead for Barclays as those details come out. When it comes to UniCredit, very different story for that Italian lender.
Yeah, absolutely. They saw net interest margin increase. It's a very strong quarter all round. I think there the executives are talking about how do we deal with this sort of extra revenue? What are we going to use with it? The interesting side of their thing that we have with the Italian windfall tax, right? And there they were saying, look, we can kind of use this get-out clause, which effectively is boosting their capital reserves, so it doesn't look like they will pay that windfall tax, and you can probably assume most Italian lenders will follow a similar strategy.
Tom, thanks very much. Tom Metcalfe, Bloomberg's finance managing editor for EMEA. Thank you for the analysis around Barclays and UniCredit, the divergent stories around European banking this morning. Coming up, we will speak to Nicolas Aguzin, the CEO of Hong Kong Exchanges and Clearing. Don't miss that exclusive interview. That's coming up next, live from the Future Investments Initiative in Riyadh. We continue to monitor all of the conversations happening at that event in Saudi Arabia. This is Bloomberg.
Nurturing also can come from men, and it's one of the qualities, I guess, that you found in your mentors that also pushed you up. Do we need even more nurturing post-pandemic? Is the way that we talk with employees going to change?
I think talent becomes the single biggest differentiator of a successful entity versus an unsuccessful entity. So you've got to do everything possible to hire, train, retain, put your arms around talent. I mean, you've really got to focus on your talent. In the past, it's always been give them money, show them that they have an upward mobility and can make even more money, and that's the only reason people come to work. I think post-pandemic, We are seeing more and more people say, I have to worry about me as a person. I have to worry about my family. I want to worry about my well-being, my mental health. So we've got to start encompassing people as holistic humans as opposed to a tool of the trade, which means that we have to engage with them head, heart, and hands, not just head and hands. The heart has to be engaged. So we have to show more empathy, show that we care, that they're citizens of the community, they're members of the family, and all of those have to come into consideration as we help an executive or an employee be an employee and be a person of the community and the family. The stakes are higher.
This is Markets Today. We're 30 minutes into your European trading day. Here are your top stories. US 10-year Treasury yields continue their retreat from 5% as both Bill Ackman and Bill Gross say the route has gone too far. Barclays plunges after missing estimates as the UK lender looks to cut costs. Meanwhile, in Italy, UniCredit climbs after raising its full-year outlook once again. Plus, Burke in the trend, Hermes outperforms peers as sales climb with wealthy shoppers in the US and Europe splurging on pricey Birkin and Kelly handbags. So, Tom, it seems that the earnings story back in focus for investors, trying to look through some of the volatility that we've seen in bond markets of late, commodity prices, the geopolitics, focus back on the earnings stories, divergent picture for banks in Europe, and lots of complexity around that earnings.
And some modest optimism then on what we're seeing in terms of the earnings, but also, of course, the yields moving lower across the US curve, given the move up that we saw yesterday to 5%, and then that correction, or at least move lower, significantly move lower. In terms of yields, maybe there's a pivot moment when it comes to what is happening, of course, in the bond market. We've been assessing as well the data coming through from France, the softness in the manufacturing sector, and right now we have German October manufacturing, that PMI coming in at 40.7. The forecast was for 40.1, so slightly better in terms of the manufacturing PMI out of Germany versus the surveys, but worth just reiterating that you are still well into contractionary territory, still well below that 50 line. In terms of services PMI, softer than the forecast for Germany then for the month of October, 48. The forecast was for 50, so the softness is there, and the divergence between the manufacturing and services data coming through for Germany. The DAX currently down up about 0.1%, adding 15 points. The FTSE 100 down 0.1%. Barclays a drag there. The disappointment in terms of the revising lower of the forecast for net interest margins in the quarters ahead. Let's have a look at how the sectors are shaping up then. The banking sector is a part of it, of course, but as is the consumer sector with luxury, the optimism coming through and lifting the CAC Cajon, and the consumer sector currently up 0.8% on the upside coming through from Hermes and a beat across the earnings for that story. Tech is also gaining on lower yields, up 0.5%. There's also some picture coming through yesterday on Wall Street, some gains coming through from the likes of Nvidia, up around 3.3% by the end of the close. Basic resources as a sector still at the top of your list right now today. 1.8% is the gain coming through from basic resources. Downside, there's the banking picture then, down 0.7%. Barclays offsetting the optimism coming through from UniCredit to drag that sector into the red. That is a quick check across your sectors at about 30 minutes into today's trading session. Anna.
OK, let's step away from the markets here in Europe, here and now, and head to Riyadh. Saudi's Future Investment Initiative was first held in 2017 when Prince Mohammed bin Salman was looking to reposition Riyadh as a global hub of economic development. That's still very much the goal. However, the outbreak of war between Israel and Hamas has complicated Saudi's vision, with the conflict hanging over this year's event then, certainly, and across the region. Bloomberg's Yusuf Kamel Eldin is at the event in Riyadh for us and is joined by a guest. Yusuf.
Thanks, Anna. It's getting really busy here in the crowd. People are standing shoulder to shoulder, top executives from all around the world. Now joined by the CEO of the Hong Kong Exchange, HKEX. That's Nicolas Agazin. He's found his way through the crowd. Thank you very much and good to chat again. I mean, it's been a difficult time for IPOs. What's in the pipeline to year-end?
So you're right. It's been quite tough, especially given the increasing in interest rates and just the fact that a lot of the funds have been mostly allocated to fixed income, money markets, and therefore you've seen a slowdown in terms of activity all around the world. Hong Kong was no exception. We had a bit over 50 IPOs this year to date. And the good news is that we're having some, sizable offerings that are starting to come into the pipeline. Right now, when we look at the pipeline, we have about 110, 120 companies that have actually filed. They're going through the process and they want to come out, hopefully as soon as possible. This week is an interesting week because we have a relatively large offering of about 8 billion Hong Kong dollars, roughly $500 million from a company based in Indonesia that is, coming to our market.
In terms of IPO proceeds for Hong Kong, we're headed for the lowest full year since 2001. The recovery you're speaking of, does that come to life in the first quarter of 24, or does that get pushed back further?
It depends on markets a lot. I mean, like I said, some companies have decided to come out independently of the markets, and they decided to try to test the markets. I mean, they're having about 52, 53 companies this year, having priced IPO. It's a pretty good number given the tough context that we're seeing around the world. But hopefully what we want is to get to that 100, 120, that is a number that we usually have.
The Gaza-Israel conflict is in the first instance a human tragedy. In the second instance, it also has a meaningful impact on sentiment. IPOs and stocks, they're sentiment driven. How worried are you that the geopolitics are going to continue to weigh into year end?
Yeah, I think you put it very well. We're very saddened by all the events that are going on, all the tragic loss of life that is taking place in that part of the world. At the same time, I mean, geopolitics always tends to play a part in the markets. And it's very hard to say that they do not affect. Our role as a stock exchange is to make sure that we're there so that we can manage the exposures that people can have and people can continue operating even through some difficult times. And they can reallocate assets, reallocate exposures. So the exchange will continue, operating, through these times and making sure that we're there to provide continuity to the market and financial investors.
The Hong Kong Exchange has been courting Middle Eastern investors, and there's been a lot of discussion around dual listings. Talk to me about your meetings this time around and where those conversations are today.
Yeah, I mean, as you well know, I mean, this is my fourth trip to the Middle East, actually fifth trip to the Middle East, fourth trip here to Riyadh. And there's so much to do between the Middle East and Hong Kong. I mean, this is not just around potential issuers that will come to our market and list in our market. It's also about, the flow of capital. There's about $4 trillion in the Middle East just in the sovereign wealth fund arena. That money needs to be invested in a broad range of industry, in particular around technology, biotech, and areas that are very important for the diversification of the sources of, all these players. Hong Kong provides an ideal platform. We are the new economy marketplace of Asia. We are the second largest biotech fundraising hub in the world. I mean, so that creates a possibility to connect that is just extraordinary. So that is the key angle.
I mean, I'll cut to the chase here a little bit and get straight to the point in terms of a potential dual listing in Hong Kong with Saudi Aramco. When John Lee, the Hong Kong chief executive, was in the kingdom, it's something that he was very keen to get across the line. What's the latest on that? What can you tell me?
I cannot comment on an individual case, of course, as you may know. But what I can say is it makes a lot of sense for companies, let's say, of the more traditional energy sector, like, the ones they operate in the Middle East, to look for sources of capital outside the kingdom, and that would be excellent because it would allow that money to then be reinvested in areas such as, new economy and,
So the conversations are still happening?
I mean, there's always conversation with lots of players in the region.
You're also expanding way beyond that. You recently opened new offices in London and New York. Run us through what the priority is there. How are you going to link that back to Hong Kong?
Yeah, so we are a very international market, but we have to also be close to clients all around the world, especially after the period of 3-4 years of COVID where there was very, very little traveling. People people are starting to lose a little bit of the understanding of what's happening in Asia. So it's very important that we not only serve them when they are in Hong Kong and in Asia, and there's a lot of presence, but we set up operations there. So over the last 12 months, we set up an office in London, we've set up an office in New York. We look forward one day to setting it up in the Middle East. I mean, that is something that I think it will make sense, given the increasing activity. We just have to think carefully and try to
In 2024, yes or no?
I'll try to do it as soon as I can.
Okay, we'll leave it there. Fantastic to chat. Thank you very much for that. That's Nicolas Aguzin, the CEO of the Hong Kong Exchange, HKEX. Guys.
Arabia in Riyadh at that FII event. Thank you very much to Yusuf for bringing us that conversation with the Hong Kong Exchange. We'll be back at the FII conference shortly for an exclusive conversation with the Tikau Capital co-founder Mathieu Chabran. That conversation coming up a little later on. And just to tell you that we are continuing to watch that panel being led by David Rubenstein. They are in ongoing conversation. Let's get back to that panel. Future Investment Initiative in Riyadh. Carlyle co-founder and co-chairman David Rubenstein is hosting a panel on navigating the new normal with the CEOs of JP Morgan, Citi, Goldman Sachs, HSBC, Bridgewater, Blackstone, BlackRock. Also on the panel, the governor of Saudi Sovereign Wealth Fund and the chairman of Aramco. A couple of interesting lines coming through, some from Larry Fink over at BlackRock saying that we are going to see higher rates for longer, so sticking with that line, doesn't expect a hard or soft landing for the economy in 2024. HSBC's Noel Quinn, the CEO there, talking about Europe, saying the challenge for Europe is the near to mid-term growth story, and that would seem to chime with some of the data we've had out this morning. Noel Quinn saying he sees potential for persistent high rates in Europe. Does that sound like stagflation? Lots more then to come. We'll continue to monitor this conversation. There is Steve Schwartzman currently speaking at the event. You can watch that conversation if you want to. Live Go is available to you on your Bloomberg terminal. You can continue to watch that panel from Riyadh. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back. The French and German economies struggled at the beginning of the fourth quarter, with private sector activity continuing to shrink as demand remains muted and borrowing costs rise. Let's get more from our European correspondent Maria Tadeo in Brussels. Maria, break down the data for us and what it means, importantly, for the ECB.
Yes, Tom, because this is, basically the final data point before we head into that decision on Thursday by the European Central Bank. As you say, we've had PMI numbers from both the French economy and the German economy. We're waiting for the euro area number, but overall, the trend that you see here is that this is an economy that's really struggling to exit that manufacturing recession. Obviously, services also under pressure. Some of the numbers when it comes to the services in France were better than expected. You could argue didn't shrink as much as expected, but nonetheless, a general sense, the numbers that we have so far is that it ended October on a softer note, and now you start the fourth quarter again on the back foot. Now, all of this, as you say, it does matter because it comes just 2 days before the European Central Bank. This is a bank that has always said now that they focus on every data point, and that's how they make decisions. Nonetheless, Tom, the geopolitics, I'm not sure if they have fully eclipsed the data going into this meeting, but they have definitely now changed the calculus to some extent. The European Central Bank not only has to deal with an economy that is still soft, but also now potentially a big, broader conflict on the geopolitical front. Now, overall, as you know, Tom, the market is positioned for a hold when it comes to Thursday, again, pointing not just to the monetary policy, but also factoring those geopolitical risks. The idea is that if you do go for a hold, that may give the European Central Bank also some optionality to the extent that they may be able to give themselves more space, considering all of the uncertainty that is still definitely playing out on the geopolitical front. It's a central bank, but at this point, no one can escape the geopolitics.
Maria, thanks very much. Bloomberg's Maria Tadeo joining us there from Brussels with the latest on the European data story and beyond. For more than 2 decades, let's turn to China now. The Chinese government used the real estate sector to pump up the economy, generating a quarter of the country's entire economic output. Country Garden, China's largest property developer, has been a key player in that effort. Now it is yet to make a dollar bond interest payment that came due last week, meaning a default is all but official, and the chances of a restructuring are growing. For more on today's Big Take story, let's bring in Bloomberg's Asia Investing and Real Estate editor, Lulu Chen, who can take us through the latest on the story. Then, Lulu, Country Garden has all but officially defaulted then, as I set out just there. How big would the impact be if we see this officially declared? How big is the impact already?
You know, when a giant like Country Garden falls, the pain and hurt is bound to be profound and widespread, because this was a company that at its peak employed more than 130,000 people, had more than 3,000 projects across the country, and also was tied to the livelihoods, wealth, and also happiness of tens of thousands of people, if not millions. The more significant aspect of this story is that Country Garden wasn't an Evergrande. It didn't borrow recklessly. It was a household name, considered one of the top tier companies, and yet Country Garden is now all but defaulted, and it really signifies the ending of the go-go era of China's property sector, the popping of the bubble.
Yeah, and the pain, as you say, is real. And you and the team have been interviewing people on the ground, people caught up in this, individuals who put money down on these properties. And it's worth reiterating that the assumption for so long in China is that property prices can only go up because that's where you pour most of your investment. And the government would never let property collapse. What does it mean for those individual home buyers then, Lulu?
Yeah, Tom, you know, 80% of Chinese household assets are tied into the property sector. And when we talk to people on the ground, these home buyers who have yet to see their home projects completed, it is quite heartbreaking, because these are people who have mortgages to pay, but also medical bills, kids to feed, and then also some construction workers who have yet to see their blood, sweat money being paid. One of the people that we interviewed said that it simply isn't worth, the returns are not worth it anymore. And after they get paid by Country Garden, they plan to go back to their hometowns and not come out as a migrant worker again. People who are home buyers, and now some mortgage boycotts, saying that even for a household name like Country Garden, you cannot put their trust in it. And yet their household savings, their life savings are tied to this company.
Okay, Bloomberg's Asia Investing and Real Estate editor, Lulu Chen, with some really interesting colour on the dynamics of Country Garden and the implications for people on the ground and possibly as well, ultimately, the government. Thank you, Lulu. Nature Metrics now is, switching focus, is one of Bloomberg's 25 startups to watch in the UK. It's on a mission to revolutionise global biodiversity monitoring. Here's a closer look then at how they are helping businesses meet their nature impact reporting requirements.
Earth's ecosystems are delicately balanced, but they're under threat from our actions. And so monitoring biodiversity will allow business leaders to opt for more sustainable practices. With so many data points, though, traditionally that's been easier said than done.
So Nature Metrics is a global nature technology company. We make biodiversity measurable by analysing the tiny traces of DNA that all organisms leave behind in the environment. The process works by literally just taking water in a syringe and pushing it through a filter like this, and it captures all of the DNA from the water, so the water comes out the other side, and all of the DNA from the water gets stuck inside, and then this is sent to our labs for analysis. So it's something that, you know, literally anybody anywhere in the world can do. Yes, I got some strange looks when I went to investors and said, I'm going to revolutionise the scale of biodiversity monitoring. And they went, what? Who's going to pay for that? I mean, biodiversity is not important enough for anyone with money. But actually that was wrong, because there was a market already, particularly in companies that were doing environmental impact assessments. Don't let perfect be the enemy of the good, especially if you're a scientist. You can often feel like it's got to be ready to publish or ready to write a PhD paper on, or you've tested it 15 times before you go out and start using it. And you have to take such a different approach in business.
That was a closer look at Nature Metrics, one of Bloomberg's 25 startups to watch in the UK, a list that Bloomberg has published in connection with the Bloomberg Technology Summit that takes place today. Coming up on this programme then, we'll get back to the markets conversation. Treasury 10-year yields have slipped after reaching their highest since 2007. We discuss the big macro movers with Ben Ram from our Markets Live team. This is Bloomberg.
So Fabien, talk to me a little bit about the ocean. It covers 70% of the planet. It gives us food, it gives us jobs, it gives us, of course, oxygen. We're taking too many fish out, we're polluting it, we're making it warmer, and only 3% of it is protected. What frustrates you the most about this?
The basic frustration is our ignorance about how integral ocean is to not only our well-being, but to our existence. And for far too long, we've been using the ocean as an endless resource in a garbage can. Imagine our planet is a three-dimensional system. The ocean represents 99% of our world's living space, about 3.4 billion cubic kilometers of volume, within which the vast majority of biodiversity lives and thrives. And that's what we're beholden to. That is what makes us possible as a species.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is Bloomberg.
This is Markets Today. Welcome back. 53 minutes into your European trading day. European stocks currently lower, actually, turning lower by about 0.1%. So the modest optimism fading across European stocks. Let's talk about what is happening in these markets then with Ben Ram, who joins us from our M Live team. And Ben, you've been looking at German bunds and the linkages to what is happening with the BOJ over in Japan. Explain, Ben.
Morning, Tom. So, we've got the ECB meeting obviously on Thursday, but, the ECB has moved to the sidelines. So the bunds are not going to trade very much off what the ECB is going to say. Rather, what's going to dictate their moves is what's happening across in Japan, where the BOJ is successively intervening in the bond markets just to contain the surge in rates, the bond rates. And it's not a defense that they can mount endlessly. It's going to have to stop at some point, especially if market functioning deteriorates to the point where companies can't issue bonds, where bond yields start surging, where bond spreads starts widening out. That is a point where it becomes indefensible. And if that happens, the BOJ will have to throw in the towel and tweak their curve control experiment, or even scrap their negative rate policy. If that happens, that will ripple through to German bonds and yields will start spiraling even higher.
And Ben, just briefly, what are you expecting from the ECB this week?
Well, there's not much for them to say apart from sounding cautiously or hawkish, because they think that 4% rate is going to do it for them. But, with the war in the Middle East, it is work in progress, because at the moment, as things stand, their ex-ante real policy rate is about 60 basis points. Now, if oil prices surge, then that real policy rate will narrow pretty quickly and sharply, and that will mean that the ECB will have to revise its macroeconomic projections. That will happen only in December. So there's not a whole lot that's going to come out of this week's meeting, though.
Okay, Ben, thanks very much. Ben Ram from our Markets Live team. Remember, you can get up-to-date analysis and insight from Ben and the rest of the Markets Live team. MLIV Go is the function to use on the Bloomberg terminal. Over in Riyadh in Saudi Arabia, the FII panel still ongoing, navigating the new norms of the global economy. On that panel at the Future Investment Initiative in Riyadh, the Carlyle co-founder and co-chairman David Rubenstein is hosting a conversation with the CEOs of JP Morgan, Citi, Goldman Sachs, HSBC, Bridgewater, Blackstone and BlackRock. We just heard, on the subject of Blackstone, we've just heard from Steve Schwartzman giving his thoughts on the return to office conversation, saying people working from home didn't work as hard. Thoughts on a postcard to Steve Schwartzman if you want to contribute to that conversation. We've also heard from David Solomon over at Goldman Sachs, of course, saying that the business is by and large operating the same as in pre-COVID. So they got onto that whole return to office conversation. Riyadh will continue to monitor the news lines coming through from there and continue to bring you the latest on the markets here in Europe. This is Bloomberg.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're going to ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
The top names in business are on Bloomberg.
The market is starting to look over the Fed's moves into falling interest rates.
We actually think that core inflation is going to fall a little faster than the Fed expects, and that will allow them to start cutting rates by March of next year.
You get a price spiral when labor markets are tight. In manufacturing, labor markets are still very tight right now in the US.
Nobody covers business like Bloomberg. Context changes everything. Markets count down in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. And market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Danny Berger in London, standing in for Francine this week. Here's what's coming up on today's program. U.S. 10-year Treasury yields continue their retreat from 5% as some of the market's most influential bears say the rout has gone too far. The French and German economies struggle at the beginning of the fourth quarter, with private sector activity continuing to shrink. Euro area figures are hitting right now. Plus, Barclays tumbles into the red after its investment bank misses estimates. Meanwhile, in Italy, Unicredit raises its full-year outlook again. Okay, your quick look on European markets. You did see a turnaround in stocks, not made much better by some of the data coming out. We've just had Euro area October PMIs hit. Services fall to 47.8. That is below forecast. The forecast was for 48.6. Manufacturing, that also slightly weaker, coming in at 43. The forecast was for 43.7. We already had a miss from Germany and France in various sectors. That already dropped the euro like a rock. It is staying at those levels. You can see that drop again was when we got German data, unable to recover with now Euro area PMIs in hand. Some other breaking lines coming from the RBA governor. That's, of course, the new one, saying that we will not hesitate to hike if CP outlook is raised markedly. We do have inflation data coming out tomorrow. That will be at 1:30 a.m. if you're here in the UK. A lot of measures coming out. The expectation is for it to come in slightly higher, 5.3% versus 5.2 in August. That not really doing much to move the Aussie at the moment, which has been higher all morning by about 0.5%. But the drama over the past 24 hours, it has been in the American bond market. Take a look at what treasuries have done over the past 2 days. You can see that slide there, that huge reversal midday after we had hit 5% earlier in the day. Now, that came off the back, whether it was caused by it or not, but it did happen after we got tweets from Bill Ackman and Bill Gross, both of them relinquishing their bearish bond view. Ackman had a very public short in August saying he's closed that, and Gross saying he's buying SOFR futures, that the data is slowing down. Let's now talk with Patrick Armstrong of Plurimi Wealth, the CIO over there. Patrick, first of all, I'm having a hard time wrapping my head around how these two guys were able to move a $24 trillion market.
Well, I think they're just talking their book. They made a good trade. They want to publicize it. They probably moved the market to some extent, but it was just a technical indicator, 5% yields. I think investors see that as a buying point. You're getting a credible safe haven with a 10-year Treasury now, where a couple of years ago there was no safe haven benefit you could really even look to because there was no yield there, so you couldn't get the duration benefit. But with a 5% yield, I think treasuries represent a good safe haven, a fair value. It's the tips that I think are really compelling, though.
On this idea that it's a safe haven, you'd think that now is the perfect time, given the geopolitical angst. If you look at TLT, for example, though, over the past 2 weeks, it's pretty much flat. Yeah. Or slightly lower. Shouldn't now be the time that we see its haven attributes come alive?
For the geopolitical aspects, people will be drawn to the dollar, they'll be drawn to treasuries, but if you look at debt issuance, debt to GDP levels, quantitative tightening, all of those things, as well as foreign governments and central banks, they have reservations about holding the dollar in the sizes they did in the past. So China doesn't want to have as much US dollars. Russia's obviously been burned by that. So you've got the safe haven aspects. I think at the yields they're providing, they will fulfill that role, but you've got a number of factors pushing it the other way as well.
So what does that mean in the meantime then? Could we get to, for example, 6%? Could we get to higher as this volatility continues, even if in the long term it does provide that haven?
I think you'd need inflation to really reaccelerate to look for a 6% yield. So I think inflation is on a downward trajectory. I don't think the Fed's going to get it to its target. There's too many forces that are creating structural inflation. So nationalism, populism, war, all of those things are not disinflationary. They're going to provoke inflationary fires from time to time. But inflation is on a downward track. You've got restrictive monetary policy. It's doing its job, and the higher real yields are also restrictive. So it's a fair value right now, I think. I don't think you should be pounding the table saying this is absolutely the best time to buy. I wouldn't be shorting it anymore either. But the tips is where I do find compelling. 2.5% real yields, with inflation being a long-term risk for me. I like to get the protection there for the sake.
So just to put a finer point on it, on the curve itself, outright, you wouldn't be shorting it, but is there anywhere you'd go outright long?
Well, I really love the front end of the curve. That's where you're compensated the most on treasuries. And if you buy AA-rated bank debt, that's risk-free in the short term, because there's no way governments, central banks can let senior bank debt fail. And you can get a 6% yield in the United States. They're pretty much essentially risk-free. So I think at the short end, bank AA-rated bonds. At the long end, tips is how I like to play it.
Okay, this is the other one I have a question for you. You say you've sold all of your gold positions. I feel like gold is finally coming to light, Patrick. Finally, there's some movement there. Why sell out?
Well, gold, it's a safe haven against geopolitical risks. It's a safe haven against monetization of debt, and basically debt dynamics are pretty terrible right now in the U.S. But I think the tip gives you all of that, plus a real yield of 2.5% almost right now. So I'm finding more attractive safe havens in the tips than I am in gold right now. My purchasing power, if I hold a tip for 10 years, is going to be 24% higher 10 years later. I'm not sure if gold's going to be up 24% in real terms over the next 10 years.
Okay, fair enough. You know, this week it's also, lest we forget, it's the busiest for the earnings season. $16 trillion worth of firms posting. So far, it feels underwhelming. Maybe it's just because we've been distracted by what's happening in the fixed income market. But are you surprised we haven't seen more excitement over around some of the results? I mean, misses have been punished so far.
Yeah.
Upside surprises, kind of shrugging at.
Yeah, it's the backdrop. What's happening in the world is what is really drawing investors' focus. So if you beat, you're almost getting ignored. If you miss, you're getting punished because investors have a lot of equity exposure. Equity rally this year. Taking profits on something that misses makes sense to de-risk given the global uncertainties that are going on. So I think it's fair, and I think the backwards-looking earnings estimates, they're going to be good. I think there's going to be pretty good beats coming from the mega caps in the coming days as well.
Are you de-risking in equities right now?
So in my strategies, I'm underweight equities, not massively. So I've got a cautious strategy that's got a 35% neutral weight. I'm at 30. I'm at 45% in my balance that's a 50-50. So I've done that since July. I've moved underweight equities, and not so much that I'm really worried about equities. It's just that I am starting to get some compelling returns at the front end of the curve and at the longer end of the curve in tips right now. So I'm seeing real returns in bonds, which you couldn't get years ago. There is alternatives.
So you're waiting for something to happen in the fixed income market before you go overweight equities?
Well, it's, in a balanced portfolio, you can buy equities, you can buy bonds, and the returns from the bonds are very clear. It's just a mathematical formula there. On the equities, there's uncertainty there, and equities generally beat inflation over a market cycle by about 4.5% per annum. That's the risk premium you get for equities. And the tip at 2.5%, I'm getting more than half of that with no risk, and that inbuilt hedge against inflation. So it's just seeing more compelling alternatives in fixed income.
If I take this kind of to the nth degree, why not just be in cash? Why not be in really short-dated paper? Because there you can get some sizable yield. I mean, more than earnings yield in a lot of cases.
Definitely in the short term, if you're just thinking, I want to make X% over the next 3 months, 6 months, makes perfect sense. But if we do fall into a recession, you're going to be rolling that over into much lower rates in the future. So you get that return right now. It doesn't preserve your purchasing power over the long term if we do fall into a recession. So a real yield at 2.5% on tips Equities trading at 16.5, 17 times earnings. That's right in line with the long-term average. I don't think the U.S. economy falls into a recession, so there will be earnings growth. So even though I am underweight equities, I'm not bearish on equities.
Okay. Patrick, great to have you on the program this morning. That is Patrick Armstrong, Plurality Wealth CIO. All right, the Future Investment Initiative is underway in Riyadh right now. There is an all-star lineup right now. It is the Carlyle co-founder and co-chairman David Rubenstein is hosting a panel, has the CEOs of, you can see there right now, of Blackstone, JP Morgan, Citi, Goldman Sachs, HSBC, Bridgewater, and BlackRock. Schwartzman saying at the moment that the Fed is having a pretty good impact on inflation. Earlier, he was also saying that those who work from home don't work as hard. I guess if you're at Blackstone, you will not be working from home. All right, if you want to watch more of that, you can type in LiveGo on your terminal. But coming up, we are going to be going to Riyadh, where that initiative is taking place. We'll be speaking to the co-founder of TKO Capital. That is Mathieu Chabran. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Season is here.
Tons going on, lots of earnings.
Beat wherever you look.
Bloomberg breaks the numbers first.
It's a tale of two earnings. Results from Goldman Sachs, Bank of America, and Morgan Stanley.
Netflix is out, guys.
With exclusive expert analysis.
Recovery is underway.
They crushed it. It was one of their best quarters ever.
This is a story all about pricing power. We're going to make more money. We're going to make more money. And we're going to make more money.
You're making bank. And I think that is what we can take away.
Bloomberg Television and Radio. Context changes everything.
The Future Investment Initiative has kicked off in Riyadh today. You can see there Ray Dalio speaking at a panel that's being hosted by David Rubenstein. A lot of heavy hitters on that panel, including Jamie Dimon. You can see there David Solomon of Goldman Sachs, Noel Quinn, Jane Fraser, Jamie Dimon, Larry Fink, a lot of folks there. Some of the lines we've heard, Quinn talking about being worried about tipping points on fiscal deficits. We've heard Schwartzman railing against work from home, saying it made people less productive. That 2024 will be not so wonderful, but then we will hit a bottom. Also there at the FII is Bloomberg anchor Francine Lacqua, who is there with a heavy hitter herself. Francine.
Thank you so much, Danny. I think we're trying to figure out what the cost of money means for future investment. And if you think about it very simply, is yes, we have inflation. We have interest rates. Are they higher for longer? But do they have to go from higher from now? And what's your point of reference? Do you take the price of oil? Do you take the price of semiconductors as one of the big concerns? Well, I'm delighted to be joined here in Riyadh, Saudi Arabia, by Mathieu Chabran. He is Tikehau Capital co-founder. Mathieu, as always, thank you so much for joining us. It must be hard to actually operate in this kind of environment where treasury yields are now at 5% for the 10-year. When you look at the cost of money, the cost of credit going up, and things could get much more difficult.
Well, Francis, first, thanks for having us here, in Riyadh, and it's a great topic because I think a year ago, when all this started, I think we said that now liquidity at a cost, and money has some value. And effectively, to your point, and these were the opening statements of His Excellency Yasir Al-Rumayyan, Governor of PIF this morning, which was the core focus on his opening remark. Is higher for longer. This 5% that we hit, yesterday, and as an investor, as an asset manager, as a risk underwriter, I think it's actually more healthy to be in this environment because now we can effectively underwrite, asset price and I would say more, asset value with the appropriate assumptions.
And there seems to be shock after shock after shock, and the latest, of course, is geopolitics. Yeah. It's very difficult to know how it ends up and whether the conflict escalates. But is it going to be bad for business? Is it going to be, even if it doesn't escalate, will people not want to spend? Consumers, business, and inflation therefore going higher?
Yeah, Francine, I think, we are in the risk management, risk underwriting business. And at any point in time, we have to factor in these externalities. And as tragic they can be, over the past, few weeks, that's another externality that we have to factor in. So great opportunity to invest because now effectively you've got some return associated with this investment. You are fighting with the risk-free rate because today's effectively investors, they can park their cash at 5%. So whenever you want to convince them that the opportunity is there, then the premium has to get, to the level they need.
Well, Mathieu, if you look at rates in general, and actually, again, the cost of money, what will it break next, and what does it mean for where you want to be invested?
Okay, so we're back to an environment where you can compound your investments. 5% risk-free rate, 5%, risk premium, and all of a sudden you start investing in credit at a high single, low teens, return, and you can compound that. As a lender, what President Banga, was saying earlier, President of the World Bank, they need private capital. They need private capital because the public money in itself, won't be able to face the challenge and the opportunity of all those mega trends that we need to invest in. Decarbonation, cybersecurity, regenerative agriculture. He was talking about, how we grow rice today. And so there is effectively a huge opportunity for this private capital in a healthier, quote-unquote, investing environment because now you can effectively appropriately assess your return. And that's where I see the opportunity.
But where do you see opportunity? So is it harder to find things because there's a lot of capital chasing the same assets? Or actually, because there's going to be a correction, you're in a good place?
No, I think, Francine, the world remains a very wide place. I mean, you can, see that again, today. So this whole theme about too much money chasing too little opportunities, I think it's somehow a little bit biased because once you get very local in some, economies, countries, jurisdiction where you can deploy, your capital, then you make the difference. If you're sitting tight, in London, waiting for the opportunity to come to you, or New York, or Singapore, or Dubai, it's a very different story than having this footprint and being able to talk to entrepreneurs, to CEOs, to executives, like we are doing today at FII. And here you create great opportunities.
And I know you're for example, interested in the transition, the green transition. But if you look at commercial real estate, which is probably the next shoe to drop, what does that mean for other asset classes?
Yeah, well, I think they picked up earlier on, and Steve Schwartzman, himself was saying that 20% of commercial real estate in the U.S., is vacant, today. But that in itself is once again an opportunity. I get back to, basics, corporate finance 1.0, supply, demand. And whenever, the supply is higher than the demand, this is where, as an investor, you can make good entry levels. So commercial real estate, in itself, is it going to zero? No, it's not going to zero. It's about, asset selecting. It's about, where you effectively deploy in terms of geographies, in terms of assets. And I really believe that you can once again create some high single-digit cap rate for commercial real estate, but warehouses is another one, residential, leisure, and traveling hotel, is another, great play.
But are you not surprised that with interest rates, going higher in such a fast space of time, that there's not more muddle, that there's not more breakage, especially in shadow banking?
Yeah, well, that's again, on the financing side, this is probably where we have to focus most. I mean, we at TKO, we've been also entering this market where we can provide some financing, much more conservative, 40, 50% LTV, loan to value to an asset, to a real estate asset. At times maybe higher, but you get, 8, 10, 12, 14% return. That's on a risk-adjusted basis. If you've got this patient capital, once again, you can compound, and then you make 2x, if not more, on your capital. And in this environment of such high volatility, this is what investors are looking for.
Okay, Mathieu, thanks so much. Mathieu Chabron there from TKO Capital. Danny, I'll have plenty more, of course, throughout the day as we continue following the developments here in Saudi. Of course, for the very latest, and also the cost of capital and some of the panels that will happen this afternoon.
Yeah, Francine, really looking forward to that. Don't worry, I'll keep your seat warm here. I won't break anything. Really enjoying listening to your conversations there. That's Bloomberg anchor Francine Lacqua in conversation with Mathieu Chabron of TKO Capital. Now, coming up, French President Emmanuel Macron is the latest world leader to arrive in Israel, hours after the release of 2 more hostages held by the Hamas militant group in Gaza. We're going to have the latest on the Israel-Hamas war next on Bloomberg.
Ackerman has quietly emerged as one of the key architects of modern sports. As the founding president of the WNBA and now the commissioner of the Big East Conference,
Commissioner Val Ackerman.
Ackerman has a knack for being at the most important tables at the most critical times.
I want to thank Val Ackerman here as well. Val Ackerman.
I had a big part in this, in how USA Basketball and the NBA could come together to support the women's national team. I feel like we really have proven something. And for me, in my personal role, whether it's in basketball, whether it's helping women, whether it's trying to help college sports hold on to the things that have made it such an important institution, I really do believe deeply in the things that I do and how we can make a difference. And very glad that the Big East has a role to play in the circles that we're part of. I just hope that the momentum we've begun to see continues and builds in the years to come.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays only on Bloomberg. Context changes everything.
Slice through the noise. Forget the noise. Ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point, what is the lesson or the observation?
French President Emmanuel Macron has arrived in Israel, becoming the latest world leader to travel to meet with Prime Minister Benjamin Netanyahu following the Hamas attacks. Earlier, President Biden spoke with the Israeli leader about plans for additional U.S. military deployments in the Middle East. Bloomberg's Oliver Crook joins us now from Tel Aviv. Oliver, what's the latest there on the ground?
Yeah, let's tie all that together. We had an additional 2 hostages that were released overnight, 2 elderly women that were taken just about 2 kilometers in a kibbutz from the Gaza border. This, of course, is a meaningful development following the other 2 hostages that were released. We understand this was brokered by, yes, Qatar, but also the Egyptians here. And afterwards, Benjamin Netanyahu and President Biden spoke. They spoke about that. They spoke about aid. We understand that 35 trucks crossed the border yesterday, which was the biggest one-day crossing of trucks since the beginning of this conflict. The UN says really that it needs to get to more like 100 trucks a day in order to make meaningful progress. But again, the other question that was discussed was U.S. deployment of additional military hardware and assets. That is going to increase, and that is all about deterrence, again, with one focus on the northern border with Lebanon.
So that was the Biden-Netanyahu call, with now Macron arriving in Israel. What happens next on the diplomatic front?
That's right. We understand that they are in a meeting right now. Benjamin Netanyahu and Emmanuel Macron, they're going to discuss some of the things and the themes we've heard from Western leaders, which is the full support of Israel, standing against terrorism. We understand that Macron is also going to talk about long-term durable solutions and the two-state solution, and also apparently the settlements in the West Bank. So he'll bring that up. I just want to mention also overnight, we did have the highest level meetings that have occurred so far since the conflict began between Israel and the Chinese. The foreign minister spoke, in which the foreign minister affirmed Israel's rights to self-preservation and defense, but also saying that civilians need to take a very, very active role in minimizing the casualties. We also heard from Xi Jinping talk about this crisis previously, calling for a ceasefire. So again, this is another part of the geopolitical complexity that is at play here.
Yeah, Oliver, thank you very much for that. That is Bloomberg's Oliver Crook in Tel Aviv. Coming up, we get back to the earnings conversation. We will be joined by the CFO of Norsk Hydro on Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding, and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit Search Go to find answers now.
From New York City.
In London, in Sydney.
From Washington.
In Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this
Is
story.
there the kind of upside?
Why do the biggest names in business choose Bloomberg?
That is a great question.
Great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
U.S. 10-year Treasury yields continue their retreat from 5% as some of the market's most prominent bears say the rout has gone too far. Private sector activity in the euro area kicked off the final quarter of 2023 with another dismal showing, suggesting the region's economy may be in recession. Plus, Barclays tumbles into the red after its investment bank misses estimates. Meanwhile, in Italy, Unicredit raises its full-year outlook again. Good morning and welcome to The Pulse. I'm Danny Berger in London. Now, we've had a lot of earnings out for Europe just this morning. Let's quickly go through some of these. Barclays, a miss when it comes to their investment bank. They're focusing on reducing structural costs, still shares down 7%. Unicredit, a soggy reception to that one, too. Their net interest income did grow over 30%. That was more than estimates. They are raising their full-year guidance, but they're also allocating over €1 billion as non-available reserves to avoid bank taxes. Hermes bucking the trend. We had weak results from LVMH and the like, but Hermes, the top of the top, still flocking to Hermes, that growing 15.6% on a constant currency basis. Finally, Novartis, those shares ever so slightly weaker. Their first result following the spinoff of the Sandoz generics business. They have only a couple years to really grow their business line before they face pressure from generics on one of their main businesses called Inestro. All right, we also have some UK PMIs hitting the tape now. October manufacturing coming in at 54.2. So that's stronger. Their forecast was for 44.7. Services PMI, that fell to 49.2. The forecast was for 49.3, so stronger to mostly in line. It looks like, though, the drop, with sterling was commiserate with the euro when we got some of those weaker PMIs data. All right, let's get to another earnings story. Norsk Hydro shares are surging this morning. They reported earnings, but Macquarie has agreed to buy a 49.9% stake in Norsk's renewable energy company. I mentioned they also had earnings. Let's not forget that. Adjusted net income plunged 94% in the third quarter. In missed estimates, there was a slump in demand in both Europe and North America. Very pleased to say, joined now by Pal Kidamo, CFO of Norsk Hydro. Pal, great to speak with you. Look, the share price reaction is clear. Investors are happy about this deal. Macquarie buying 49.9% of RAIN. Given the surge in raw material costs, financing costs for the renewable energy industry, how key was it to get this financing?
Well, it's a good day when investors and analysts are happy. We are happy. Macquarie is also happy. And we'll be happy because it is a challenging market on the renewable side. We see that with the rising interest rates and also high volatility in energy prices. It's not the same positivism as some years ago. For us, it's been important to develop the renewable company Hydro Rein and also to do it in a capital-light way. It has taken a bit longer than what we expected, but it's also because we were looking for the perfect partner. And with Macquarie on board now, we look forward to continue decarbonizing European industries through our renewable energy company.
Well, you mentioned just how difficult it's been given financing costs are higher. And we're in this moment of rethink in the bond market, at least, that potentially rates are going to be higher for lower. What does it mean for you to not get central banks cutting, that financing costs are going to continue to be challenging, at least for the next year or so?
Well, in general, for us as a company, it has an impact on our general financing costs. But we have a strong balance position and we have a lot of locked-in interest rates on our bonds. So it's not a big issue. But when developing a renewable company, the biggest risk, of course, sits in the development phase and the price negotiation phase. At the starting point, you should be able to pass on the higher rates in the price to your customers to achieve the same profitability. And of course, that is an ambition we have going forward. The world wants more renewable energy and they need to pay the cost for it.
When it comes to aluminum and alumina, it was also a challenging quarter, quite a miss on some of your figures compared to expectations. Signs at the moment, Paul, do they point to continued deterioration?
Well, I think if we start with the miss, it was mostly related to a multi-year provision that impacted our bauxite and alumina results. Apart from that, we were quite in line. But as you say, raw material costs came down a bit slower than what was expected, especially energy costs related to the turmoil in the fuel oil market impacted us a bit negatively. But going forward, we expect the cost pressure to continue to come down. And we guided for around 500 to 600 million in additional cost release on the raw material side.
There's the other side, which is also weaker demand. And you did signal that you're reducing production in response to some of that. Can you quantify exactly what that reduction will look like?
Well, as a starting point, we have a smelter operation and we have recyclers. We have around 130,000 tons out of 2 million tons production curtailed on the smelter side, which we're not bringing back now due to the uncertain markets. Recyclers are a bit different. Those you can ramp up and down with the short-term fluctuations. And that's where we're taking out some capacity now to ensure that we're not building inventory and adjusting in line with the marketplace. It's not huge volumes so far, but as we see Q4 becoming weaker than many expected on the volume side, and this potentially continuing into Q1 and Q2, it could be the need to take out some more recycling capacity.
I do wonder, this lack of demand that you're seeing, or at least weaker demand, Paul, is it commiserate with economies entering a recession?
Yeah, aluminium is one of the commodities that moves extremely in line with the general macro environment. And the area where we're really seeing tough demand now is in building and construction, which also has a relation to the recession. I think if we look at the macro environment in general and most analysts' views, the expectation is that the demand doesn't start coming back again until Q3 and Q4. But that is, of course, dependent on seeing some rate movement into next year also.
So just to put a finer point on it, Paul, from what you're seeing, are you expecting a recession in this global economy?
No, we are expecting the soft landing scenario and that we will be probably more borderline than what was believed half a year ago at least, as there are some signs of improvement macro-wise, although not massively.
We are in this environment, I mean, just even beyond these macro headwinds, we have the geopolitical headwinds. There are lots of tensions, passions are very heightened. Often, natural resources find themselves caught in the middle of that. How concerned are you about the growing tensions, Paul, especially as we enter an election year for more than half of the world's global economy?
Well, as a private person, I'm extremely concerned. And as the CFO of a company, I'm also concerned with the uncertainty this generates. And you are right, it tends to impact the commodity markets. Usually, it comes through on the energy side, which pushes the cost curve and gives an impact on the general pricing levels. So commodities have had at least a short-term tendency to benefit. At the moment, we're in a situation where a lot of at least European capacity is already curtailed due to the large, big increase in energy prices. But there are still quite a lot of borderline smelters, which could have to take out capacity if the energy pressure becomes too tight.
Okay, Paul, we really appreciate your time this morning. Again, congrats on your deal. That is Paul Kildemo, CFO of Norsk Hydro. All right, beyond Norsk, we also had Barclays earnings today, and those shares are much lower today after the UK lender missed estimates at its investment bank. It also lowered guidance for its domestic business for the second quarter, the second consecutive quarter, I should say. It also signaled plans to reduce restructuring costs in the future. Bloomberg's Jan-Henrik Forster joins us now. I mean, almost 7% decline, Jan, on these shares. I mean, this is not a market happy with the results.
No, market is not happy. I feel like if I look at the results, they remind me of still water. You know, there's no Spark. The problem is, Barclays is generating capital. That's a good thing. CET1, 14%, no negative surprises, and, 2 billion of profit. That shouldn't be too bad, but yet the market doesn't like it. And that's, first of all, because the investment bank performance is bad relative to peers. That's certainly one problem. Advisory was very weak, also compared to peers. And then, as you said, there's a second consecutive downgrade to net interest margins. And that tells you really the story that the benefits from rising rates are fading, especially in the UK, with banks having very high deposit betas. So certainly the market sees these results as very weak, and that comes on top of an already undervalued stock. That's the actual issue here. And I think it all comes back to the strategy discussion. Barclays, and this is what the market wants, needs to make some sort of announcement on its strategy.
I was going to say, I think I got a note from Jefferies saying basically, is it time for the nth restructuring over at Barclays? Because, in general, it's not been a great, past year for investment banking. So, is that what it's going to take if Barclays is so much worse than the others already in a weak environment?
Yes, and that's exactly what it is. And that's what I mean with there's no spark, right? In this moment, from a CEO, what you want to see is a bit of intellectual curiosity and ambition to turn this thing around. Barclays clearly needs to turn to strategy beyond cost cuts. The question is still, what are they going to do with, let's say, their payments business, their merchant acquiring business? How much capital do they want to allocate going forward to the IB in an environment that is more, or macroeconomic environment that is more difficult? All these questions are still outstanding, and I feel like the market is losing patience.
I'm going to make you jump around a little bit because, a very different story for UniCredit, but I want to get into the Italian banks. They have this windfall banking tax to deal with. They seem to be able to sidestep that, lifting their revenue goals, shares still down. Well, what did you make of UniCredit?
Well, I think UniCredit got one thing right, or Andrea Ocel, is he bought back stock the whole time. Every single penny he used to buy back stock. And I think that made, all the difference compared to peers. He's more, you can't really compare UniCredit with Barclays,
Right.
Different geographies, different rate cycle. So clearly, the ECB is behind in terms of hiking rates. So UniCredit is still making money on lending. But I think what he got right was kind of over-delivering on costs and buying back stock, which will give him acquisition currency in the future. And I think that's a key story for UniCredit. The windfall tax, maybe as a general remark on European banks, will continue to be a curveball for European banks.
Right.
Will other governments introduce windfall taxes and so on higher interest rate income?
Right, but it's about giving the shareholder something back. Jan, thank you so much. Thanks for joining us.
Thank you so much.
Jan Henrik Forster, the Bloomberg senior reporter for investment banking on Barclays and UniCredit. Now, coming up, specializing in threat detection and screening technologies, the Smiths Group reported estimate-beating results. We'll sit down with the CFO, Claire Scherer, next. This is Bloomberg.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're going to ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
The conversations that matter and the insights you need. This is The Pulse. I'm Danny Berger in London. Now let's stay here in the UK. And last month, the Smiths Group reported revenue for the full year that beat analyst estimates. Now the firm is a global leader in threat detection and screening technologies that protect people and assets. Of course, that only really scratches the surface of what Smiths does. Claire Scherer, Smiths CFO, joins me now. Claire, thank you so much for joining. And within your many businesses, I know you have a large exposure to the U.S., more than 50% of your revenue. And it's important in that to have American construction and building projects and those sorts of things. From your top-down view, how would you describe the economy in America, its strength or lack thereof?
So our FY23 results, which we reported in September, were record results for us and will grow again in FY24. That growth was led by our two largest businesses, which are exposed to energy transition and also exposed, as you described, to safety and security around the world.
Right.
A small part of our business is exposed to U.S. housing. It's about 15% of our exposure. And that's something we're keeping a close eye on because the data has been very mixed. So on the one hand, mortgage rates are up. On the other hand, the housing stock is low and lower than it was in 2019. And building permits are up, but housing starts are down. So it's really quite mixed data right now. Fortunately for our business, we're in attractive geographies in the U.S. where building is stronger. We're also introducing a number of new products. So the innovation has always been very important at Smiths. And so we feel like we're navigating the soft patch in U.S. housing quite well.
Are you concerned, though? It is this interesting push-pull when you look at mortgages above 8%. But as you say, supply is low because no one really wants to sell if you have to be locked into 8% mortgages. Are you concerned that something there breaks, or will it continue again just to be a soft patch?
Well, right now, it looks like it's an uneven amount or a contradictory amount of data that's coming through. So we're focused on what we can control. What we can control is making sure that we innovate, that we bring the right products and right solutions to our customers. And one example of that is earlier this year, we acquired a company in the U.S. that expanded our product offering. It also expanded our geographic presence, and it brought into the Smiths family some patented sealing duct technology, which helps with energy efficiency. So when we look at the U.S. housing market, we focus on what we can control, which is introducing innovative value-added products. We also make some kit that goes into heat pumps. And so we're really focused on, given the macro, which we can't control, how can we use innovation and our customer intimacy to continue to drive our growth? And that business in FY23, our FlexTech business grew at about 10%.
Your security scanner business, the types of things it's found at were venues very, very hit by COVID, when you have airports, entertainment venues, and offices. How has that evolved over the past 3 years?
It's been a fascinating evolution. So in our detection business, which, as you said, protects 90% of the world's largest airports, but also protects cargo, ports and borders, and other urban venues, we have record order books. On the airport side, many airports are upgrading to CT technology. That's the technology that allows you to leave your liquids and your laptop in as you move through the passenger checkpoint area.
Which we like that. We don't like taking liquids out.
Exactly.
Yeah.
So it's a much better passenger experience. It's a much more efficient experience. And for airports, it's a safer solution. We just sold our 1,000th CT machine last month. And there's still a long road ahead of us as airports around the world make that upgrade. We're also right now protecting Ben Gurion Airport as one of the largest airports in the world. Our equipment and our service engineers on the ground there are doing their part to help ensure that that airport continues to operate safely and smoothly.
Are they asking for more security, for more orders? Are you seeing more from that from Ben Gurion?
No, we have been servicing that airport for many years. They have been an important customer for many years. We're just doing our small part there to help ensure the airport keeps running smoothly. And then in other venues, when you look at urban security and other settings, we have also won an interesting set of contracts around the world, Australia, Japan, and we'll be providing the security at COP28 when that kicks off next month.
Claire, I'm very sad because we're out of time, but I will leave our audience with one note. Please Google and read about their involvement in the Indian space landing.
It's great.
It is really fascinating. Claire, thank you so much for joining.
Danny.
Really appreciate your time. That is Claire Scherer, the Smiths CFO. Now, coming up, Bitcoin rallies to the highest level in months. It's also going to the moon, I guess. Can the world's largest cryptocurrency hold on to the momentum? We're going to discuss that next on Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
This is Daybreak Europe. I'm Kriti Gupta. Let's get to the stories that set your agenda.
Taking you from the U.S. market's close.
A lot of this was priced into the U.S. session.
To the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Some breaking lines just crossing the terminal. According to people familiar, Chinese President Xi Jinping has just made his first known visit to the PBOC. This is the first visit he will have made since he became Chinese president a decade ago. This really underscores the government's focus on shoring up the economy and the financial markets. Again, go read that story on your terminal. The great Bloomberg team in China just pushing that one through. All right, the other big market mover today, it is Bitcoin. It is extending a rally that's been fueled by expectations of fresh demand from ETFs, not an unfamiliar story to many. It's now reached the highest price since May of last year, and it briefly crossed the $35,000 line. We're joined now by Bloomberg's Emily Nicole, who covers crypto for us. Emily, over the past, few months, we got one of these headlines that crypto has a new leg higher, that we're all optimistic about an ETF. What's changed this time that's fueled this recent optimism?
Well, if you look at what Bitcoin's done in the last week, so it had a 10% intraday jump last Monday when there was a rumor spread in crypto media news outlets that there had been an approval already for one of the Bitcoin ETFs that are on the slate. When that was revealed to be not true, it quickly kind of paired those gains. But that meant that everybody was already on edge, looking for that next leg higher when we might get some news on a Bitcoin ETF. And so while yesterday's approval in courts of Grayscale's challenge to the SEC was kind of, expected, it was just formalizing an already expected move, that meant that everybody was kind of on tenterhooks and ready to take that price higher.
So what does that mean for the sustainability of this rally, considering, as you point out, it is kind of a jumpy market?
Well, that's kind of the concern, right? I think what we've looked at in Bitcoin over the last year has been not the volatility we're used to. If we think back to the bull runs in previous years, we thought of Bitcoin as this really volatile asset, and that's not been the case in 2023. Now that we're seeing some of that return, it is making analysts think, is this short-lived? Is there much further to go? We're in the kind of the final stages now before a potential ETF approval in the US. And if we're not going to see much change in the wider macro environment anytime soon, where yields are pretty high, the appeal of Bitcoin kind of fades away in that aspect.
All right, Emily, thank you very much for that. We're to talk about Bitcoin being like a not volatile asset, but you're right, it has changed a lot. Emily Nicole there from our crypto team. Now, this morning, Novartis raised its full-year guidance after posting third-quarter sales and core EPS. Just want to point out, in the next hour, I will be speaking with the CEO. That will hit at 10:30 a.m. UK time. And on the commodity story, the International Energy Agency says it now expects global oil demand to reach its peak this decade. It's also lowered its projection for gas consumption for the fourth straight quarter. Don't miss Bloomberg's interview with the IEA Executive Director, Fatih Birol. That will be at 11:30 a.m. London time. Up next, I'm sticking around. It is Bloomberg Brief. Manus Cranny will join me in New York as we examine the reversal in this bond market, led by the Bills reversal. This is Bloomberg.
What do you consider to be the biggest challenge?
Infrastructure that supports trade is the biggest challenge. Our senior brother, President Adesina of the AFDB, estimates the annual deficit, infrastructure deficit in Africa to be over $100 billion. But that over $100 billion is actually also an opportunity for investment. So it is a massive, significant challenge that we are confronting. And my fear is that we may succeed in establishing a very effective legal construct and a very effective legal foundation for trade liberalization and investment liberalization in Africa. But all of that will come to naught if the infrastructure deficit is not addressed, because you will need the goods to move somehow, and you will need to have good trade corridor connectivity, ports, trade corridors that connect countries that are landlocked to the ports.
In global leadership are on Bloomberg.
The conflict between the U.S. and China has escalated so much. This is one of my greatest fears, that the small nation is forced to choose sides.
Bloomberg. Context changes everything.
Good morning from our world headquarters in New York. I'm Manus Cranny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
President Macron touches down in Tel Aviv, says he'll call for a revival of peace talks between Israel and the Palestinian nation Hamas. They released 2 more hostages. Bombers are ditching their views. Investor Bill Ackman says he's covered his treasury shorts, while PIMCO's Bill Gross says he's buying short-term freight futures in anticipation of a recession. And European bank earnings, they're in full swing. Barclays lowers its guidance, while UniCredit lifts its revenue goals. Novartis also lifting its outlook. We catch up with the CEO later this hour. A very good morning to you. You would have wanted more bang for your equity buck on the back of 30-year bonds dropping by 21 basis points yesterday. That is the question you need to ask yourself. Yes, we're back in the green, but the S&P 500 closed for the 5th session in a row on the downside. Why are equities not performing better on the drop of 21 basis points in 30s and over 19 basis points in 10s? Because they're frightened as heck about the reality of recession. And of course, it's the Bill's great adventure coming to an end. Danny will take you through that, but that's about preparedness for something much tougher in the US economy from Bill Gross and Bill Ackman. Europe is down by 14 ticks this morning. Again, volatility there. We're on the verge of wiping out 2023 gains in the European markets. We're knee-deep in this earnings season, but Goldman Sachs warned that the risk premium, there's not enough cushion for Goldman Sachs in terms of the risk premium. And if this recession and slowdown comes, as is suggested more and more by some of the big beasts and veterans of Wall Street who are gathering in Saudi Arabia today, if it does come, it could be more brutal for Europe. I put the FTSE in, we're down by 0.3%. Barclays is the laggard here. Investment banking revenue missing by over 5%. That lags Wall Street. They're getting ready to cut their UK guidance. They're flagging cost cuts. So Barclays, at the bottom of your screen, again, going for structural changes at Barclays, and it leads the FTSE 100 lower this morning. It is the laggard by a country mile in the UK. Danny.
Yeah, and our reporter Jan Henrik will join us in just a moment's time on that story, Manus. Look, the past 24 hours, as Jim Reed over at Deutsche Bank says, have been all about treasuries. It's been a roller coaster ride, and given the ride we saw yesterday, pretty calm today. We're down by about 2 basis points on your 10-year yield, hitting 4.8% at this moment after going up to 5%. I'll talk about the bills in just a moment. Dollar also soggy this morning. Steve Englander over at Standard Chartered saying that compared to what the dollar should be trading at, we're down by about 2% based on his expected model. One currency dropping like a rock this morning, that is the euro, after weaker PMI data out of Germany and the whole of the euro area. Finally, man, it's got to put Bitcoin here. It's up another 8%, at one point hitting 35,000 over some optimism around a spot ETF. Yet another ruling in the grayscale case, overruling what the SEC said to them, that they should be able to have an ETF. This was expected, but we're all still very excited. Okay, let me get to the Bills, Manus. Bill Ackman and Bill Gross, both of them tweeting yesterday, a couple hours, shall we say, after the 10-year yield hit 5%, which happened about 24 hours ago. Bill Ackman saying, we covered our bonds short. There's too much risk in the world to remain short bonds at the current long-term rates, while Gross says that he is buying SOFR futures, again, betting that rates will be lower than where the Fed has it. But, man, this is kind of the crazy thing that I'm having a hard time wrapping my mind around, that you have these two bills able to move a $24 trillion treasury market. Was it them, or was it just the 10-year hitting 5%?
I think possibly we would give them just a little bit too much power if we said that they were responsible for the entirety of the bond move. I think, Danny, you reflected very well. We looked at some of the headlines coming from Davos in the desert, as it's known, or the PIF gathering. Noel Quinn saying we're at a tipping point on fiscal deficits. This plays into the narrative of many of the anxiousness and the vexation of the bond traders. And then you look at Larry Fink, your friend. Of course, you're going to need to raise rates further, and that is perhaps the antithesis of what the bond market is saying to us at the moment. The one thing is for certain, the equity market is not convinced that these bond markets will not take another run on the upside. Danny, let's reflect to one of our main geopolitical stories. The French President, Emmanuel Macron, has arrived in Israel. It's the latest world leader to travel to meet the Prime Minister, Benjamin Netanyahu, following the Hamas attacks. Bloomberg's Oliver Crook is in Tel Aviv. Oliver, again, another leader arrives. He will undoubtedly affirm the support for Israel's right to protect itself. But where are we in terms of the overall diplomatic front? Good morning.
Yeah, as you say, Manus, he just entered a meeting just under an hour ago with Benjamin Netanyahu, and he is here. He arrived on the tarmac a couple hours ago. And as you say, there were going to be that affirmation of the support for Israel, the total condemnation of terror. But then also what we understand is that Macron is going to bring forward some of these discussions about peace potentially and talk about the two-state solution. And apparently, according to Élysée, we'll talk to Benjamin Netanyahu about the West Bank settlements, which is not something we've heard very much talk about publicly. We should also say there was another interesting diplomatic development overnight, which is that the Chinese foreign minister spoke with his Israeli counterpart. That is the highest level discussion we've had between the Israelis and China since this crisis began. In that call, apparently they talked about the Chinese, about the right to defend itself, Israel, also espousing sympathy for the Israeli people, but also spoke to the Palestinian counterpart about the sympathies there. However, we also understand that Wang Yi, the Chinese foreign minister, in a previous call with the Saudis, had said that the Israelis have gone beyond what is allowed by defense, and also that they had to stop its collective punishment of Gaza. That from the Chinese minister. We've heard from Xi Jinping also calling for a ceasefire, and of course, Manus, critically, the context here, the broader implications with the U.S. backing Israel so firmly, and of course, the issues that exist between China and the United States.
Oliver, we also had Hamas releasing 2 elderly women who were among the hostages taken. There's been lots of talk of a ground invasion delayed in order to continue those talks. Where do we stand on it?
Yeah, so as you mentioned, 2 elderly women that were kidnapped, taken just about 2 kilometers in a kibbutz just from Gaza. We understand that their 80-year-old husbands are still being held. Again, Hamas has released them with Qatar and Egypt running as the sort of intermediaries to negotiate that. And afterwards, Biden spoke with Netanyahu. They discussed hostages. They also discussed aid, which is a key part of all of this. We understand 35 trucks entered Gaza yesterday. That is the greatest number of trucks that have entered since the crisis began. Still very shy of the 100 that the UN says is required. And of course, the other thing that they talked about was the U.S. deploying more military support within the region, which they said they're going to do. Again, this is all down to deterrence and not getting Hezbollah and Iran emboldened.
Okay, Oliver, thank you very much. Oliver Crook on the ground in Tel Aviv. The World Bank President Ajay Banga has warned of the added risk of war to a fractured global economy. This was at the FII conference a little bit earlier.
So much going on in the world, in geopolitics, in the wars that we are seeing, and what just happened recently in Israel and Gaza. At the end of the day, when you put all this together, I think the impact on economic development is even more serious.
So let's carry on the conversation now in regards to earnings. I mentioned at the start of the show, Barclays shares slump, missing the estimates. It's the investment bank lowering the guidance for the domestic business for a second consecutive quarter. It's also signaled plans to reduce structural costs in the future. What does that mean? Jan Heinrich is with us. Jan, good of you to join us this morning. The market doesn't like what it hears. The investment bank is lagging its US peers. Is that the sword of Damocles for this earnings report card for Barclays?
Yeah, I would like to play devil's advocate a little bit, because if I look at these results, there are kind of two hearts beating in my chest. I don't feel banks always need to be that profitable. They need to be well capitalized, and they need to generate capital, and Barclays is doing that. And they also have a pre-tax profit of $2 billion. The trading results in fixed income are actually, almost on a historic high. The last quarter they had such an income was second quarter, and that was a record. That was a record quarter. So actually, shares are slightly coming back. I feel it's not that terrible. But what it tells you, obviously, the guidance revision is really bad. That's the second one, the second consecutive on net interest margin, which tells you the story of UK banking. That's an important income stream for Barclays. That basically the benefit of higher rates is fading, and the deposit beta is very high for UK banks and very high, especially for Barclays. So that's an issue. Then trading results are weaker than peers. That's the other issue. But I think the main point is Barclays is already undervalued, and the market is expecting a strategy update, and it's losing patience. And this is exactly what these results show.
Jan, it's 5 a.m. in New York. You can't play devil's advocate. It's too early for that. You got to wait until at least at like 10 a.m. or something like that. Okay. So UniCredit. I don't think I'm going to say too much because I don't want you to push back on me. Just what'd you think of those earnings? I feel like you're out for blood today, Jan. I'm nervous.
I don't care today about UniCredit earnings.
Why is that?
Because I think that Andrea Ocel has done one thing right, and that was basically buying back stock. And that gives him an edge. It's probably over kind of all his European banking peers. It's probably the best performing European banking stock. And then the second thing, UniCredit is still making money on lending, and it's more geographically diversified than, for instance, Barclays, and that is paying off right now. Maybe for Barclays, the point is, look, you have a US business, a big one. If you are in the biggest economy in the world with higher rates and all of that, then you really have to make sure you have to make money on that.
Right. Yeah. Fair enough. I guess someone cares though, because shares are down. Yeah, Manus?
I was just going to say, you're going to get a brutal telephone call. I don't care about UniCredit. I can just imagine Ocel stomping around the office. I don't care about UniCredit. But on that front, it is. I mean, he is sort of, he is fairly vainglorious at the moment, isn't it, relative to his peers?
Yes, and I think that's because he has been using every penny of his excess cash to buy back stock. He is very good in managing costs. And now he even, you saw this deal he did in Greece/Romania. That's probably not that exciting. It's not what what the market or what everybody is talking about. Andrea Ocel, the biggest FIG deal maker of all times, and now he's doing a kind of a smaller-ish deal in Greece. But these are small pockets of growth, and it's also now after cutting costs, he has a little growth story to tell, and that distinguishes UniCredit from literally, maybe apart from UBS, every other bank in Europe.
Jan, great to have you. Jan Henrik Forrester, whether or not he cares about earnings, he does care about these banking stocks. It's Bloomberg senior reporter for investment banks. All right, let's get to some of the other top stories that are trending on the terminal this morning. As I mentioned, Bitcoin, it's extending its rally. It's hit $35,000 for the first time since May of last year. The cryptocurrency was fueled by fresh demand over a possible ETF approval in coming weeks. Bitcoin remains below its pandemic era 2021 peak of almost $69,000.
The BOJ is on bond watch. The central bank said it's monitoring yield movements to determine whether they'll adjust their yield control program at the next week's policy meeting. This comes after announcing an unscheduled bond purchase operation to curb rising yields. That was earlier today, Danny.
And will Country Gardens miss bond payment trigger credit default swaps tied to its debt? That's the question posed to the Credit Derivatives Determinations Committees. China's former top builder has remained silent after announcing that it didn't believe it would meet all of its offshore payments on time last week.
Well, coming up, we're going to speak to Derek Halpenny of MUFG on the resilience of the U.S. economy. And we'll dive into the Novartis numbers a little bit later on with the CEO of Az Narasimhan. He joins Danny and I this hour to talk about the numbers and the future of Novartis. Good morning from New York and London.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
This is Bloomberg Brief. I'm Danny Berger in London. Manus Cranny is in New York. Manus, we started the show talking about the Bill's bets on bonds, that they're abandoning shorts, but I specifically want to get into Bill Gross's trade itself because he's buying SOFR futures. If we look at these contracts at the moment for March 2025, it's pricing 4.3% of a Fed funds rate. In other words, 100 basis points of cuts. So by buying this thing, he's betting that there's going to be more than 100 basis points of cuts by March 2025. Joining us now is Derek Halpenny, Head of Research for Global Markets, EMEA, and International Securities at MUFG. Derek, great to see you. All right, is that a trade you'd want to jump on? Because that does seem to imply recession, as we were just talking about during the break, if you're betting there's more than 100 basis points of cuts.
March 2025, I think it's very feasible for sure. I think over that period of time, it's more likely than not that there will be a period of recessionary conditions. And let's not forget, before the most recent summary of economic projections, the previous set, the Fed were calling for 100 basis points next year. They've cut that to 50. So they're still calling for 50 basis points of cuts next year, and they've got a very rosy scenario. So I think, even a slightly more negative scenario, a little bit lower inflation, and you very easily get to a scenario by March 2025 that they've done more than 100 basis points of cuts for sure.
Good morning, Derek. Good to have you back with Danny and myself. It's good to see that the later time start got you out of the bed and up the road. So welcome. It's good. I was up at 2:30. So what does that do? What does that do to your call on the dollar? You said this is, what, 11 years in the run. The dollar bull run has lasted 11 years, the second largest scale ever. It ended last year. If you take what Gross is doing in terms of positioning, he's going for rate cuts. Does that make you want to double down on your bearish dollar position? Or if we are in a recession and we have a heck of a lot of geopolitical angst, wouldn't I want to be long dollar?
Yeah, there is that offsetting risk, of course, but I think you have to take it in the context of the starting point. And if the starting point of some form of risk off could result in an initial bout of US dollar strength, obviously it depends what it is, and the scale could be different, but then you're in a situation where you have this substantial amount of potential monetary easing that would come from the Fed. And I think in the context of that, you can still see a picture in which the US dollar weakens. And, you know, I have a window where I think the dollar could strengthen further, although I must say over the last couple of days, the resilience, in particular in euro dollar, has been pretty remarkable. And, you know, given where we are today compared to a month ago, all of the variables that you look at, treasury yields, bund spreads, BTP over bund spreads, natural gas prices in Europe, they've all moved in a direction where euro dollar should be considerably lower than where we are. So I think something is beginning to shift, and maybe it's the early doubts about the resilience of the economy.
Yeah.
You know, we've had some comments from Fed officials to suggest that.
Well, but could I not just say everyone's long dollar right now? It's just positioning. That's why we haven't seen a bigger move to that side.
Well, I think it's definitely partly that. And I think when you get down to kind of the 105s, just below the 105s, if you go back to breaking that level last year and going from 105 to 95, you know, we had a catastrophic type scenario being priced of lights out in Europe, natural gas prices through the roof, deep recession. And unless you get some kind of scenario that needs to be priced again similar to that, I think mild recession in Europe, we're there. The big story from the relative macro is potentially what's going to happen in the US. From growth of 2.5% to potentially down to close to zero, we think, by the middle of next year. And that's where the real story from the macro side is going to come from.
I mean, if you got to 0% by next year, what would that, I mean, that would have quite a dramatic impact on risk, wouldn't it?
Again, it depends, Manus, not necessarily.
But if we're going for 4%, some people are going for 4.5% this week. Some people are saying to me 5%. The GDP now, you know, is blowing away. So to go from 5 to 0, call me old-fashioned,
but the consensus for Q4, it is, but the consensus for Q4 is dramatically weaker than what we're getting in Q3. So I think already the markets, and you know, acknowledge that the strength in Q3 is not going to continue. And indeed, you know, we've done some natural language text analysis of the Beige book last week, and we pulled out all the references to the consumer, and it was the worst sentiment on the consumer since the onset of the pandemic in 2020.
I found my fact of the day. I'm going to flog that to death. I really am. Derek Halpenny's looked back over. How many Beige books did you look back over? Anyway,
wow.
I'm minding off them.
That's
my fact of the day. Derek, thank you very much. Derek Halpenny there at MUFG. Our guest this morning, the consumer is unwell in the United States of America, based on his analysis right here on Bloomberg.
think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in. We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
We're going to see higher interest rates for longer.
You have a political, you have a monetary, you have a conflict type of environment.
We're sitting here with the backdrop, which I think we all acknowledge, of the aftermath of the terrorist attack in Israel and the events that have been unfolding since, and it's desperately sad.
Long term, I'm certainly optimistic, but I'm uncertain right now.
I'm generally an optimist. I think you'd be foolish not to look at some of these things taking place today in Ukraine, Middle East.
We will not see a hard or a soft landing in 2024.
There is the potential for persistent high interest rates and high inflation in Europe.
If you take the time horizon, the monetary policies that we're going to see and so on will have greater effects on the world. And you look at the world gaps, so it's difficult to be optimistic on that.
19 voices at the Future Investment Initiative in Riyadh there, Danny, of course. I think you said this, it's easy to spot who's the bond trader and who's the CEO. I mean, they're all there, aren't they? Noel Quinn, you got Ken Moelis is on the ground. They're all there giving us their views on growth. And Noel Quinn says we're at a tipping point on fiscal deficits.
Yeah, no, again, I love this because everyone was basically like, look, there's tensions coming up, but generally I'm an optimist, where Ray Dalio was just like, no, I'm pessimistic about the direction of global growth. But Manus, how about this headline for you? Schwartzman there saying that people from working from home didn't work as hard. Guess you can't work at home if you're at Blackstone.
Back to the office. Coming up, we're going to catch up with the CEO of Novartis in just a couple of minutes.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities
to each other, and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO, and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
Welcome back to Bloomberg Brief. I'm Anna Strani in New York.
And I'm Danny Berger in London. Here's what you need to know. President Macron touches down in Tel Aviv, says he'll call for a revival of peace talks between Israel and the Palestinians as Hamas releases 2 more hostages. Bond bears ditch their views. Investor Bill Ackman says he's covered his treasury short, while PIMCO's Bill Gross says he's buying short-term rates, futures to be specific, in anticipation of a recession. And European bank earnings are in full swing, with Barclays lowering its guidance, while UniCredit lifts goals for their revenue. Meanwhile, Novartis also lifts its outlook. Our live interview with the CEO is in just a moment's time. First, Manis, a quick check on these markets. It's almost as if the bond market was taunting us. At this time in the show, I think basically around now, 24 hours ago, we got 5% on the 10-year yields. We talked about it to death, and that's perhaps why the market decided not to play along and drop about 16 basis points over the rest of the day. Now we're trading at 4.8%. It's pretty calm given the roller coaster we've seen, down about 1.5%. Was it the Bills? Was it Ackman and Gross abandoning shorts, abandoning bearish views, or was it just 5%? Finally, giving us some ammo for duration hunters to come back in. Dollar, that drops. We're just talking with Derek Halpenny about the dollar's direction, about the limitations of how much more strength there really can be to come. One strength that has been very clear, Manis, it is Bitcoin. I feel kind of bad I have it on my board today and not you, because I know you love a little bit of Bitcoin. Up 8.5%. It touched $35,000. Again, this excitement around will we or won't we get a spot Bitcoin ETF?
Just for everybody out there, at 2:45 this morning, there was a close call whether Bitcoin would make it to a headline. But you're right, the bond market was taunting us. Why did the equity market not respond more respectfully to the implosion in bond yields? Those steepeners were aggressive that were put on. Maybe it is that cathartic moment of the steepeners being taken off. Equities are up by 0.4%. Again, we were down for 5 days in a row, so we're seeing a miniature rebound out there. There's a heck of a lot of VIX call buying going on as well. $25, $32 call spreads are trading aplenty, so there is a view that volatility is going to rise. There is a lack of conviction, though, in this equity market, given the size of the moves in the bond markets. To Europe, you're looking at clawing its way back, but you're looking at perhaps the 3rd month of declines as we go towards the end of October, wiping out 2023 goals. The PMIs this morning were ungenerous to sentiment, in the very least, in Germany and in Europe. You then pivot to the UK, down by 0.2%, and it's the banks that are under pressure. Barclays, we've just had a conversation with Jan Henrik. He actually feels that the story is perhaps a little bit more bullish than the market is reflecting. Barclays is down, they're cutting their outlook, a 5% miss on the investment banking revenue, and they're going to go for structural changes, Danny, but there's no doubt about it. The Bill and Bill's excellent adventure in the bond market is over. It was on X. It's official. Or was it the steepeners ran out of breath? Danny, good morning.
Good morning, Manus. Yeah, look, I spoke with Patrick Armstrong of Plurimi Wealth in the past hour, and he said it can't be these two schmucks. He didn't say that. I'm adding the schmucks adjective. That move a $24 trillion bond market is just attractive now. I mean, we've heard this from so many people. We heard it from Steve Major. If you thought 4% was attractive, then surely 5% on the 2-year yield, maybe 10-year yield, maybe that is a screaming buy.
Screaming buy. There you go. Well, the thing about it is whether we get one more run. Derek Halpenny from MUFG was very, very clear, by the way. He sees a dramatic drop in growth going into next year. The risk is that you drop to 0%. Let's shift gears a little bit and start to talk. We're deep in the weeds of earnings season. Novartis has given us their third quarter sales. That beat the analyst estimates, with guidance coming in line as the firm raises its profit forecast for the third time. This is the first report since spinning off Sandoz generic business. Joining us now to discuss the numbers is the CEO, Vas Narasimhan, joining us from Basel. Good to have you with us. Do you know what went through my mind when I looked at this? I saw you 6 years ago, and you set off on a journey to change this company. How unshackled are you today with these numbers after the spin-off? Good morning, Vas.
Good morning, Manus. Good morning, Danny. Great to see you both. You know, it's been a 6-year journey to transform Novartis into a pure-play innovative medicines company. We've done about $100 billion of transactions over this time. We created 3 global leading businesses, supported the creation of a consumer health business, the Alcon eye device business, spun off Sandoz into a leading generics company. And now what I see everyone is seeing coming through in the third quarter is Novartis as a pure-play innovative medicines, I think, powerhouse. And you see we were able to deliver double-digit sales growth, over 20% core profit growth, which really shows, I think, the business now really showing what it can deliver as a pure-play innovative medicines company.
What do you think, then, is the next challenge that you face on the horizon, given you've pivoted to this pure-play model? What do you need to conquer next?
You know, for us, it's going to be delivering in our 4 core therapeutic areas. A big mantra now inside the company is focus, focus, focus. And we need to keep delivering strong pipeline assets and launches in oncology, cardiovascular and renal diseases, immunology, and neuroscience. And when you look at the portfolio of medicines that we think we have 9 major medicines that have multi-billion-dollar potential that can deliver that growth over the coming years. We've guided to 4% plus growth and 40% core operating income margins out into 2027. And when you look at the performance of some of those growth drivers, we're really excited about the performance of our breast cancer drug Kisqali, our multiple sclerosis drug Kesimpta, the emerging performance of our Pluvicto prostate cancer medicine, amongst others. So I think everything's headed in the right direction, but of course we're going to have to consistently deliver on that pipeline and launches to be successful.
Look, the one hot button topic, and we'd like your views from a couple of different angles here, is obviously on the obesity drugs. I mean, the world is in a frenzy at the moment. You dropped one from development, MBL949. You talked about high risk and high reward. Where are you in that narrative in the obesity drugs? What comes next for Novartis? What have you got in the pipeline? How do you plug that hole?
Look, on obesity, we're taking a much more next-gen look at what could come in the future. We have early-stage research efforts looking at what mechanisms might support patients to impact obesity. And we really look at this from the lens of how can we impact cardiovascular disease and renal diseases, which are core to our long-term focus. But what I like to think about is, rather than chasing the herd into obesity, where can we deliver breakthrough innovation where we're really uniquely positioned? And that's in this whole new class of oncology drugs called radioligand therapy. It's in using CAR-T therapies to really deliver almost cures in severe immunological disease, which is remarkable, and continuing to be a leader in RNA therapeutics. These are 3 very large markets, we think $20 to $30 billion markets over time, that we can build and have a leadership position to really drive for long-term growth.
So you're looking perhaps past the frenzy that we see now. But Vas, just on that point, because Manus is so right, everywhere you turn, everyone is talking about these weight loss medications, to the point where even Nestle is talking about giving out products that complement things like Ozempic and Wegovy. What is the risk? Is there a risk in that, of this absolute madness we've seen around these products?
look, I think these medicines are really impactful, and these GLP-1 agonists have really delivered important benefits for patients across a range of different indications. But I think always we have to look at risk-benefit. Nothing comes for free when you're giving these kinds of therapeutics. And as you go broader and broader, you inevitably will pick up safety signals. And also, I think one of the questions is long-term use. How will patients stay on these medicines? Will they lose muscle mass over time? Will there be impacts on cardiovascular risk because of the impacts on heart rate and other factors? So these are all things I think the next generation of drugs are going to need to address. But I think it's important also from a public health standpoint, diet, exercise, some of the fundamentals can't be lost.
Yeah.
There's nothing that really comes for free when you think about longevity.
No, I can assure you there's nothing for free. You've just got to do more miles on the treadmill or walking around New York. Look, we could have endless conversations about those drugs and the societal impact, but we're here to talk about you and your business. Roche does a $7 billion deal. The natural sort of generic question is, do you feel under pressure to do another deal? Let's dispense with that. Where is the market? Is it getting more expensive for you to do the kind of deals that you want to do, given the heat that somebody like Roche has turned up in the market? What is the deal objective for you? You're 6 years in. What do you want to, I'm not saying it's your swan song, you could be there for another 6 years, but what kind of deal do you want to do that sort of says, yes, I was here?
Our focus is on these bolt-on M&A deals that are within our core therapeutic areas that really build scale within those 4 therapeutic areas I talked about, or that give us a further technology advantage, like we did an early stage deal in the area of small interfering RNAs in these technology platforms we're trying to build. You know, when I look at the market overall, of course, the biotech sector is having its second year of really historic lows, at least the historic lows over the last decade. So certainly the valuations can be supportive of activity, but really we're driven by the science, and we need really, really strong science to make these bets. And I think it's critical to look very carefully at these assets and make the appropriate valuations.
Oh man, see, I was looking for the tie of can we judge how relaxed Vas is dressed depending on whether or not he's moving into biotech or not. We'll have to play that game next time, Vas. All right, does that mean then, if you're looking for bolt-ons, that the era for transformative M&A for your sector, for you and your peers, are we far from it? Are you going to leave the bankers just waiting and hoping for those types of deals?
Well, the bankers will keep coming, I'll assure you of that. But, I think when you look at our sector over the long run, there really hasn't been significant consolidation in over a decade. And part of that is just the reality that beyond a certain scale, you don't get further scale effects from getting bigger in R&D or getting bigger in the commercial environment. Now, of course, policies could shift that would make that more attractive 5 years from now. But in the near term, I don't see consolidation events. I really see everyone trying to focus in, collect good assets from the biotech sector, focus on their internal R&D engine, and hopefully drive successful launches in the market.
Vas, really wonderful to catch up with you this morning. Please come join us anytime, whether earnings results or not. Vas Narasimhan, there, the Novartis CEO. Now, speaking of the tech world, let's head over to the Bloomberg Tech Summit. It's taking place here in London. Anthropic co-founder Jared Kaplan is in conversation with Bloomberg's Brad Stone. The AI startup has been reported to be in talks to raise $2 billion shortly after Amazon agreed to invest up to $4 billion in the company. If you want to watch the whole thing, you can view the panel on Live Go. Let's take a listen as we head to break.
Anthropic is, we think that there should be kind of a race to the top on safer AI, more ethical AI in preparation for the fact that we believe there will be more powerful systems on the horizon. So I think the goal is for there to be competition in the direction of safer and more reliable systems. So to sort of make that concrete, we recently made a set of commitments, a responsible scaling policy, responsible scaling commitments about basically standards that we'll hold ourselves to as we build more powerful systems. So the current systems we have now, like Claude 2, we have information security, we have constitutional AI. We think that that's sufficient, but we're imagining systems that are effectively able to operate autonomously, a system that might be able to sort of install itself and run itself on new computers all on its own, or a system potentially that might be used by bad actors to say build or operate cyber weapons, other kinds of weapons. We all know that.
Names in business are on Bloomberg.
I see a world where financial conditions have gotten tighter, and the transition mechanism, which the Fed would like to see in slowing down the economy, which we all expected, it's taken a lot longer. So the real impact of higher costs around the globe, in the US and Western Europe, it's not been felt yet. And so when people say, well, we're going to have a soft landing, I'm skeptical.
Nobody covers business like Bloomberg. Context changes everything.
Val Ackerman has quietly emerged as one of the key architects of modern sports. As the founding president of the WNBA and now the commissioner of the Big East Conference,
Commissioner Val Ackerman.
Ackerman has a knack for being at the most important tables at the most critical times.
I want to thank Val Ackerman here as well.
Val Ackerman.
I had a big part in this, in how USA Basketball and the NBA could come together to support the women's national team. I feel like we really have proven something. And for me, in my personal role, whether it's in basketball, whether it's helping women, whether it's trying to help college sports hold on to the things that have made it such an important institution, I really do believe deeply in the things that I do and how we can make a difference. And very glad that the Big East has a role to play in the circles that we're part of. I just hope that the momentum we've begun to see continues and builds in the years to come.
This is Daybreak Europe. I'm Kriti Gupta. Let's get to the stories that set your agenda.
Taking you from the U.S. market's close.
A lot of this was priced into the U.S. session.
To the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Welcome back to Bloomberg Brief. I'm Danny Berger in London alongside Manish Krani in New York. It's a big week of big tech earnings, the biggest week for all earnings. We're going to get $16 trillion worth of reports from S&P 500 companies. Microsoft and Alphabet, they'll be kicking things off after the market closed. And joining us now on What to Expect is Bloomberg's Alex Webb. Alex, let's start on Microsoft, because some of the headlines I see for What to Expect have been basically tepid sales growth. So where do we stand on things?
Yeah, I mean, as ever with these things, it's going to be the outlook that's important. The expectation is for quarterly sales growth below 10%, which is a slower pace than we've seen in recent years. But Microsoft has been going hard and fast into cloud investments to support this sort of, in inverted commas, AI revolution. Of course, it has a very close relationship with OpenAI. It's its biggest investor. So when we look towards the quarterly outlook, real attention is going to be on what benefits is it deriving from those AI investments? Is this sort of cake over eggs, or is it something that is really going to start to come into usage in the second half of this year?
Alex, good morning. Good to see you. So we'll also get Alphabet, owner of Google. Now, the thesis is that Google has a little bit more immunity than, let's say, for example, Meta or Snap on the advertising. Do you concur with that? Is that a consensus trade?
Yeah, and if you want to be in the business of selling almost anything at scale, you need to be advertising on Google. That's decreasingly, or has decreasingly been the case across Meta's various platforms. It therefore becomes a little bit of a sort of leading edge bellwether on consumer sentiment. Do the brands think that consumer appetite is going to pick up? You start to see the groundwork being laid from an advertising perspective for the Christmas quarter, trying to get people to part with their dollars in the holiday spending. So any comment from Google that gives an indication of that has, of course, implications for Google, but a little bit of broad implication for the market as a whole. If Google's doing well, it doesn't necessarily mean that everybody else is going to be doing well, but if Google's doing badly, then everybody else in the ad tech space is likely to be feeling the pain as well.
Alex, thank you very much. That's Bloomberg's Alex Webbs. Let's see what those numbers deliver. Will it add to the equity narrative after the tanking in bond yields? Well, from Silicon Valley to Washington, the House Republicans are trying once again, you got it, to choose a nominee for Speaker after the party's two previous candidates failed to secure enough support. Joining us now is Zach Cohen, our government reporter. Will the House elect a Speaker today? I mean, you must be bored with this question. The world is the world is now fascinated by the GOP, not just America. So will they choose someone today, do you think?
It's certainly been the only question we've been asking for the last 3 weeks since Kevin McCarthy was ousted from the Speaker's chair in Washington. House Republicans did nominate two different men before today's vote. Steve Scalise, the House Majority Leader, Jim Jordan, the House Judiciary Chairman. Both of them won the nomination, a majority of House Republicans, but failed to get that magic 217 number on the floor of the House, of the whole House, which includes obviously not just Republicans, but Democrats as well. And so House Republicans will go behind closed doors again today, try to find a third nominee. And that person, if they manage to find a broad swath of support from House Republicans, they could be elected Speaker as soon as today. But finding a majority, and not just a majority, but near unanimity among House Republicans for a Speaker nominee has so far eluded them.
Manus, I don't know if this game made it across to Ireland in your childhood, but looking at the board reminds me of the game, Guess Who? Where you have the little pictures of different people and you say, like, okay, is it the man in the glasses? Is it someone with gray hair? I mean, there's quite a few people to digest, Zach. Who's actually in the running here?
I think the front runner at this point is Tom Emmer, who's the House Majority Whip, the number 3 in the House leadership, a Republican from Minnesota, a former hockey coach. He is seen as the most likely to win this nomination, just given the fact he's already high up in leadership. The one thing against him is he is one of the 2 Republicans that are running today that actually voted to certify the 2020 election. The majority of them actually voted to overturn the election results in favor of former President Donald Trump in his efforts to prevent now U.S. President Joe Biden from taking the White House. And so Emmer's vote on that, along with Austin Scott, another Republican who's running for Speaker, that has not exactly won the endearment of Trump's allies in Congress, on Capitol Hill, or broadly across the country. And so that could give some of his colleagues pause in supporting him.
Okay, Zach, thank you very much. Hopefully we'll get something to talk about. I'm sure there will be that at least come tomorrow. That's Zach Cohen of Bloomberg Government. Manus, a few earnings to work through. We talked about Barclays with Jan Henrik. Look, some disappointment there. The investment bank, their revenue miss, focus on restructuring, on reducing structural costs. On the restructuring part, there was a note from Jefferies saying that they might need to have their nth restructuring given these results.
Yeah, and then Andrea Orcel over at UniCredit, net interest income grows to over 30%, topping the estimates, raising its full-year guidance for the third straight quarter. And then, of course, I know you've got Hermes in your sightline. No, the dollar is not sufficiently strong against the pound or the euro for me to buy you your Birkin bag just yet.
I was going to say Hermes earnings are in my sightline, but actually buying Hermes things, I'm not quite there yet. Look, strong results, Manus. It's clear that Hermes, at least for the time being, is kind of recession-proof. LVMH, not great results, but, good results from Hermes, despite the fact that neither I nor you are buying me handbags.
No, definitely not on your... Well, it's nearly Christmas as well. You never know. You never know what
That's
you
true.
get for Christmas. Then we've got Thanksgiving before then. I've changed my festivals. You're not up in luck here.
Oh, you're getting a Thanksgiving turkey, Manus. This is you are American.
I'm going to be on a plane to Vienna for Thanksgiving. Actually, I'm coming to see you.
Oh, never mind.
I'm coming to see you for Thanksgiving.
Yeah.
You can have me round to
over.
West London for supper. Yeah, thank you.
Perfect. We'll have a Friendsgiving. It'll be marvelous. All right, coming up, well, Manus is going to jet off to go set up with the surveillance team, so stick around. He'll be taking you through the next hours. But first, we're going to take a look at some of the market-moving events to watch throughout the day. This is Bloomberg.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why, part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to Bloomberg Brief. I'm Danny Berger in London. Manus Cranny is in New York, but he's run off to go set up with team surveillance. So stick around for the next few hours to see him. All right, let's get you set up for your trading day. French President Macron is expected to speak from Israel in just a few minutes. That will be at 6 a.m. Eastern. Then we're going to get some data. U.S. PMIs, those come out at 9:45 a.m. Eastern as we kick off the final quarter of 2023. Then it's the big tech earnings. That will kick off with Alphabet and Microsoft. Both of them report after the bell. Speaking of those, let's get a quick read on those prices in the pre-market, because Google and Microsoft, they are slightly higher. Last I looked at the pre-market, there you go, up by about 1%. We are expecting some weakness coming from cloud sales in Microsoft this quarter. Alphabet, all about their ad sales. Are companies continuing to spend? That will be the big question for them. Again, those hit after the bell. The euro, that is a mover. Here and now, euro is weaker by about 1/3% versus the dollar. You can see a decisive drop just before 9 a.m. London time. What happened then? We got a bunch of PMIs that came out. You had France, some weakness there. You had Germany, again, weakness there. And then you had the entirety of the euro area. The interesting thing here, though, is even though that the euro is significantly weaker versus the dollar, the Bloomberg dollar spot on its own, that is little change this morning. It's something Steve Englander over at Stan Charter points out to say the dollar is neither reacting to risk aversion nor rate differentials. Perhaps we are showing concern about higher long end yields, not something you'd want to buy the dollar for. All right, that's it from Bloomberg Brief, the New York team, and our very own Manus Cranny.
So many people say the only way to really deal with climate change is kind of eliminate oil and gas and then have more clean energy. Is it realistic to eliminate oil and gas in the foreseeable future?
You actually have to at least mitigate it. I think you have to bring a lot of it down and replace a lot of it, but you also have to, you can also have a huge impact by trying to do things like carbon capture and so forth, right, and around it. And it's going to take both approaches. Even today, greater than 80+% of the way the world operates around energy right now is still fossil fuels, when you kind of look at it. And probably what's more striking is the fact that the demand for it is going up every year.
Things like solar or wind, it's nice and environmentally friendly, but really is not going to produce enough energy to really replace oil and gas in my lifetime, I assume, right?
Well, not by itself. So let me just say, solar and wind are critical components. This is going to be sort of a collective effort with a lot of different technologies that are each going to come in and take their piece. What we do at Breakthrough, we look at technologies that could produce remove half a gigaton of carbon a year. And the way to think about that number is we have to remove, say, 100 half a gigatons, a year in terms of what we have to replace.
The top names in global leadership are on Bloomberg.
The conflict between the U.S. and China has escalated so much. This is one of my greatest fears, that the small nation is forced to suicide.
Bloomberg. Context changes everything.
This is Bloomberg.
I think these higher interest rates are starting to bite on this economy.
Fundamental, technical elements have driven yields beyond where they probably should be.
We have to see more repricing of risk assets reflecting the higher rate environment.
As long as the real economy continues to grow, we can afford interest rates at this level.
Yields are rising because we're finally seeing supply come in and really scare those bond vigilantes.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
It's the bond markets world. We just are living in it. Good morning, Jonathan Farrow, Tom Keene, Lisa Abramowitz. This is Bloomberg Surveillance. Good morning. John and Tom have ditched me this morning, but we are very much in luck because Manus Crenny and Gina Martin-Adams are both with us, which is a good and beautiful thing as we try to understand how we can get past a bond market that just won't let anything else matter. Manus, I wanted to talk about earnings. I wanted to talk about geopolitics. I wanted to talk about everything else, and instead we're talking about a 19 basis point swing in the 10-year. Suddenly, boom, it hit the 5%, no thanks, and all of a sudden came crashing down.
So the question you need to ask yourself was, Bill and Bill's terrible adventure that came to an end, Bill Ackman and Bill Gross, do they really have that much swag in the bond market? I don't think so.
How long did it take you to come up with that?
Danny and I came up, we've been here since 2:30 this morning.
All right, carry on.
The bottom line is, you're right, that huge amount of volatility in the bond market. The one thing that surprised me was, why did the equity market not get more of a bid on the back of such a swaggery move? Was that just steepeners being taken off, or was it reappraisal of bond risk?
Yeah, and probably it's just PTSD in the equity market. I mean, the last month and a half has been absolutely terrorist impacting the equity market from the bond market, and there's just nowhere to turn. High beta stocks, low beta stocks, there's no defensive strategy in the equity market when the bond market is moving this quickly, because the defensive stocks tend to be more bond sensitive. They tend to be more debt ridden. And the result is the equity investor just doesn't know where to turn. And so I think that, frankly, one day is one day, and the equity market is going to say, okay, wait, let's see where the trend moves from
Hold on
here.
a second. Let's just put a bow on that, because are you saying that basically we are seeing the stock market have more rationality and a little bit more control and less volatility than the bond market, which is thought of as the smarter of the two asset classes?
Yeah, well, and this has actually been the story all year. Bond market volatility far surpassing equity market volatility, where equities do have another thing to hang their hat on, right? And that's called earnings and broader economic conditions. And earnings have generally started to improve this year relative to where we were last year. So equity markets can trade on that as well. The bond market definitely impacts equity market valuations. It impacts high debt stocks in the equity market, high leverage stocks in the equity market, but not the market at large. And so the equity market volatility can remain relatively suppressed even when bond market volatility is so extraordinary, considering the earnings backdrop.
It's pretty shocking to me, especially as we wait for earnings from the big tech names, including what we're going to get today from Alphabet as well as from Microsoft. When we take a look at Davos to the desert, and I know that you have intimacy with this, Menace, based on your time in the Middle East, in Riyadh, at this FII conference, pretty dire commentary from some of the CEOs there. It was sort of surprising to me that suddenly they're striking a note that is really pessimistic.
Well, it shifts every time you hear from, I mean, what was it, a couple of weeks ago, Jamie Dimon was talking about the possibility of 6% on Treasury yields, you know, maybe even higher. But it's interesting, when you go through the roll call of who's there, you can find the bond trader and the CEO. The bond trader is, of course, Ray Dalio, you know, from the bond market, Ray Dalio, who says he's more pessimistic on the outlook for the global economy. Then you look at Noel Quinn, and he's saying we're at a tipping point on fiscal deficits. So again, they're all incrementally becoming more bearish on their outlook and their guidance.
Well, and this raises a question, and the State Street CEO is talking about the hangover that the market seems to have, the suppression from the geopolitical transpirations, events. How much do you see that? That we definitely are seeing a damper put on equity valuations because of what's going on?
Yeah, I think you see it mostly because of what's happening with yields, but oil prices are the proxy for what's happening in the Middle East as far as the equity market is concerned. And when oil prices started accelerating in July, August, September, it definitely had an impact on the equity market through rotation. It had an impact on sector performance as well as country performance globally, and it's starting to show up in earnings numbers as well. So the oil users of the world are seeing earnings revision momentum turn sour, where the oil producers of the world are generally experiencing a positive lift.
When it comes to oil, we are seeing a little bit of a lift this morning, a little bit of a pop in West Texas Intermediate, also in crude. Some people looking at this as a gauge of what's going on in the Middle East, and yet hard to really get any kind of read. 10-year yields, this is where all of the drama is, 4.846% after climbing through 5% at one point, peak to trough yesterday, 19 basis point swing in the 10-year, a 21 basis point swing in the 30-year yields, and a bit of euro softness because of some data that we got out of Europe, possibly pointing to a recession there. S&P futures up 0.5%. What we're looking at today, just talking about the recessionary conditions that potentially are coming to the fore in Europe. In the U.S., 9:45 a.m., U.S. S&P Global Composite data comes out. Does they get a confirmation of the same kind of weakness in the U.S.? I know, Gina, you've got a lot to say on what we're seeing over in Europe today. The Future Investment Initiative Conference in Riyadh has been starting, the Davos in the desert, 7:10 a.m. Don't miss this. Jamie Dimon of J.P. Morgan will be joining our own David Rubenstein. I say our own, but he's the co-founder of Carlyle, also the host of Peer-to-Peer Conversations. And today, Alphabet and Microsoft reporting earnings after the bell, really key to understanding just how much more this equity market can rally, given what a momentum builder these two have been. 55% gain for Google shares, Microsoft shares up 37%. Joining us from Salt Lake City, he is not skiing, there is no snow. He is not hiking, he is just there for the casual conference. John Stolfus, Chief Investment Strategist at Oppenheimer Asset Management without a tie. It is lucky that John and Tom are not with us. John, how do you get away from the volatility in the bond market?
Well, I don't think you do. I think what you do is you've got to get through it, Lisa. At these times, what we're primarily recommending to our investors in times like these, when the bond market sets the stock market bouncing between gains and losses, look for babies that get thrown out with the bathwater. Think of your goal as being beyond. It is not in the day. Distinguish yourself between a trader and an intermediate to long-term investor, and there's plenty of opportunity here.
John, good morning to you. The biggest opportunity, I mean, we've had a couple of guests yesterday come on the show and say now is the time perhaps to move neutral on duration. That was BlackRock. Now is the time to think about adding duration. Do you feel more comfortable adding sovereign duration than you do corporate duration?
Well, actually, you know, we have a mixed view of that. At the longer duration, we think more corporate. And at the shorter end, we think, of course, we think of the govies at this particular point. We are overweight equities, underweight fixed income, but we do think in this environment, the good news is it's the end of free money. It's a normalization of interest rates. Bond buyers are getting something in return for the money when they buy a bond, and bond issuers have to pay for the privilege of borrowing money again. We're leaving a period of emergency liquidity to a more normal environment, but it's difficult because it's a dramatic increase in interest rates on a nominal basis. You know, and it's costly for leveraged investors, but that's not our venue.
I'm going to leave the conversation to Gina on the terrorism that has been sort of wreaked by the bond market on the equity market. But when you look at this structure of the market that happened yesterday. What happened yesterday was virulent by anybody's estimation. Mohamed El-Erian has made the point on a number of occasions about the short-term stabilizers and the long-term stabilizers of the bond market perhaps have been dislodged. Yesterday's market performance, how alarming was that to you in terms of the kind of moves? What was it? It was the long end move by 19 basis points, 30 years down 21 basis points, my apologies, and 10 years down by 19 basis points. Was that stabilizers being removed, or Manus, don't worry, that's just a little bit of catharsis?
Manus, I've been in this business for 40 years. I've been through every boom, bust, and recovery cycle since 1983. And when we see this kind of a thing, the one thing it seems very clear to us is this is not atypical to see these kind of moves, dramatic moves, okay, not specific moves that were yesterday, but with all the things that are going on within the market and globally across asset classes, it is to be taken into consideration. Actually, is quite normal. We're right about where we should be in the process of this. It's uncomfortable, but considering where we've been from the financial crisis to the pandemic, to the disruptions of the supply chains, and now to a geopolitical risk that is elevated to an extent that we haven't seen in years, this is not atypical.
John, one of the things that has changed over the last few years is this degree of bond market volatility, which is abnormally high compared to equity market volatility. Do you anticipate that to change going into 2024? And how does that volatility differential really frame your equity market outlook?
Yeah, and Gina, I would have to say, you know, when we look at this year, we came in overweight equities, underweight fixed income. In terms of performance, it hasn't really been a bad call if you look at the S&P 500 versus the Bloomberg, what is it, Global Treasury Ag. It would seem to be a way to go equities. We would expect that going forward, we'll experience less volatility as the Federal Reserve is able to exhibit the fact that its operations, working its mandate with amazing sensitivity, this particular hike cycle, in my experience, I'm amazed, they're being helped out by the long end of the bond market, where we've seen yields come up. This looks like just a process that is not comfortable, but is one that should reward investors who are diversified and understand their objectives and can sustain a certain amount of volatility. Although if you consider the volatility that we've experienced at different periods over the last 40 years, I mean, you know, it's just, this is a transitional period, and transitions aren't easy.
And then with your overweight on equities, I would imagine it's been a relatively frustrating period given the lack of breadth and participation in the market from small caps as well as the top 7 S&P 500. What do you think is going to catalyze better breadth, better performance, more distribution of gains across the equity market?
Well, I think some of it will probably be from a structural perspective. You know, if you look at it, in the case of some sectors, you'll find better valuations in other areas. But the area of technology is likely to be central to all of this, and the fact that technology today is in a period of innovation in which what it's doing is not just for technology. It affects the consumer and business. It's deeply embedded in the lives of business and the consumer. And advances in technology affect all sectors, all 11 sectors of the S&P 500. This year, if you do a year-to-date SPXL1 on a Bloomberg GRR, you'll bring it up and you'll see that on a year-to-date basis, it's the cyclicals that have beaten the defensives. Extraordinary. And, consumer discretionary, communication services, and I'm looking at my Bloomberg right here. It's like an eye test at this hour of the morning. But in industrial, I mean, really haven't done all that badly if you look at it. And in terms of earnings seasons, we've seen earnings seasons that have once again outpaced expectations. It's not a robust situation, but it's consistent improving resilience. And that's what we've got to see. That's got to continue. But it's a lot of factors that are working here, whether among the consumer, whether it's business, whether it's the Fed, whether it's the size of the U.S. economy and its diversity. It's been a remarkable story so far.
4,900 still your target by year end, John?
It remains at this point 4,900. We would have to say when we put the 4,900, we had our target that we put in last December was 4,400. It was realized sometime in June or July, as I recall, when it closed. The market closed above 4,400. We gave it a couple of weeks. We saw what was going on in the market. We raised our target to 4,900, looking for about 6 to 7% upside from that level. Last I looked, it's around 12 or 13% we need to get. It's under observation, but at this point, we're going to we'll leave it at 4,900 for today.
John Stoltzfus, thanks so much. Tylus in Salt Lake City, and you passed your eye test. Thank you. John Stoltzfus of Oppenheimer Asset Management. Really interesting to see, sort of clinging to the bullishness despite a whole host of tyranny by the bond market. Interesting.
Yeah, and his commentary around defensive sectors, I think, is really telling. It's something we're exploring as well this week, is this dichotomy between really low breadth, very poor performance, and yet defensive sectors generally performing the worst of the S&P 500 is quite unique.
Coming up next hour, we've got JP Morgan's Jamie Dimon. Right now, we're taking a look at some gains.
The top names in business are on Bloomberg.
The market is starting to look over the Fed's moves into falling interest rates.
We actually think that core inflation is going to fall a little faster than the Fed expects, and that will allow them to start cutting rates by March of next year.
You get a price spiral when labor markets are tight. In manufacturing, labor markets are still very tight right now in the US.
Nobody covers business like Bloomberg. Context changes everything.
From New York City,
From London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone. Have a great evening.
Here's what I'm watching. You do not want to miss this story. Is there the kind of upside?
Earnings season is here.
Tons going on, lots of earnings.
Beat wherever you look.
Bloomberg breaks the numbers first.
It's a tale of two earnings. Results from Goldman Sachs, Bank of America, and Morgan Stanley.
Netflix is out, guys.
With exclusive expert analysis.
Recovery is underway.
They crushed it. It was one of their best quarters ever.
This is a story all about pricing power.
We're going to make more money. We're going to make more money. And we're going to make more money.
We're making bank. And I think that is what we can take away.
Bloomberg Television and Radio. Context changes everything.
I look at the financial situation, the fiscal spending, which is more than it's ever. I'm talking about the United States, but it's almost true around the world. It's more than it's ever been in peacetime by a long shot, with the highest debt levels we've ever had by government. And there's this kind of omnipotent feeling that central banks and governments can manage through all this stuff. I'm cautious. I don't think it makes a piece of difference whether rates go up 25 basis points or more. Like zero, none, nada. I think whether the whole curve goes up 100 basis points, I urge people, be prepared for it. I don't know if it's going to happen.
Tell us how you really feel and what are you running for. That would be Jamie Dimon, JP Morgan Chase CEO at the Future Investment Initiative in Riyadh, Saudi Arabia. We'll be hearing more from him coming up in about an hour when he speaks with David Rubenstein, host to Peer-to-Peer Conversations, as well as co-founder of Carlyle. Right now, we are struggling to understand some of the the geopolitical developments, especially in light of markets that have been relatively sanguine. Yes, you could see crude traded on the NYMEX up about 0.5%, $85.98, but still subdued kinds of price action at a time where there's some pretty fiery rhetoric and there's some pretty concerning discussion about the U.S. losing its role on the global stage. Joining us now to talk about this, Jennifer Flitton, head of U.S. government affairs at Invesco. And Jennifer, I want to start there. We're starting to hear more about the myriad conflicts that the U.S. finds itself facing and the inability for a fractured government to deal with it. How concerning is this to you?
I think the fact that we don't have a speaker of the House right now is very concerning. I think it's concerning the Republican conference right now, who is meeting at 9 a.m. this morning to decide among 8 members now who will be their next speaker. And I don't think they're anywhere closer to 217 than we were 2 weeks ago, which is the magic number to get a speaker on the House floor. And with the volatility in the Middle East, in Ukraine and in Indo-Pacific, this is really the focus right now that the Senate's about to take on in a supplemental bill that the president had sent to the Senate last week.
Good morning, Jennifer. Good to talk to you. So every time we show this montage of faces of who could lead, what goes through my mind is how do we go from a field of 2-3 last week to a field of 9? But what I want to know is for any of these newcomers to shine and actually have a fighting chance at getting up, what do they need to do? What do they need to say? What do they need to convince the GOP of?
Well, I think right now it's about bringing the different factions together of the GOP in the House, because you have the conservative hardliners who really want to stick to the previous year's fiscal level in the appropriations bills, right, in the government funding, which has to be done in some way. We either have to pass a stopgap resolution on November 17th to take us into the rest of the year, or they have to come to some sort of agreement on appropriations bills. And right now the Senate is marking to a different fiscal year than what the House wants to mark to. And then you have to bring in your moderates, right? I mean, those who are concerned about pragmatically governing the House. And so bringing those two factions together is going to be